Populate. I had a roll call button, but I don't want to upset the Katina man today. Maybe I'll do it on Monday. What's up, Gustavo Callum Mitchell Miller, second in the chat, baby. What is up, everybody? Let's wait for that chat to populate. Adam Deluce, Big Adam. How about that Man City L? That was nice, right? That was pretty good. Alexander Raphael, Slap Chop Guy, Dave Thomas Johnson, baby. Big Michael Lloyd. Pitchbull, Matt Booth, everybody. Now we're populating, baby. Blackberry, John E. Obviously, Bears versus Bulls goes without saying. Dave Campbell in there. Airsoft, she is the one named Sailor Moon. Also in the chat there. I don't know why I always do it like that. Big beer money. I was about to say big money scalper. It's beer money scalper. All right, guys, let's get to some housekeeping. We are brought to you by Search Trader. Account funding of up to $1 million. Keep up to 90% of the profit. Enjoy relaxed trading rules with an 8% max trailing drawdown on all new accounts. Shout out to the folks there at Search Trader. Good morning, Adara.
Good morning. How are
everything?
You? Things are good. Things are well. We'll see if the market is green. We're wearing green today, so gonna try to manifest. But yeah, good times. I am looking at some of those earnings related moves. Charge point is on my mind.
Yep.
We'll see if that can charge into a long, or if the phone dies, it goes short.
Right off the bat, eh? Charge point, charge into a long. Yeah.
Disney also I'm liking as well. Because it's a little funky. I cannot, if we continue to see, we kind of have a flat top, a little bit of baby flat top. So we'll see what we do here. But I am intrigued. I am interested. My interest is piqued. We shall see what we shall see. Also, all the AI moves, purple llama, all that. So I'm very open-minded right now. What about you? How are you doing?
Well, I'm watching the future. I got to tell you, because we're doing the dance with no pants here at 16,000, and we've been consolidating at 16,000 for quite a bit of time. You could say that this 1020 candle started touching that 16,000 point level on the NQ December contract, and we have been very sideways. The wicks above 16,000 have all been sold off. What have I told you about that in the past? It's not declarative, it's not anything, but it is something to be aware of. When you get into that key resistance level, and the wicks go above the level, and then the closing prints come south of it, it is something to take note of, and we're doing that exactly right now. So we'll see how this bad boy here manifests. But the future at a key level here, new dude booted, as Canadians like to say. They probably have no idea what I'm talking about.
Was that no doubt about it?
Yeah. It was a very
fancy Canadian.
It was like a very aggressive Canadian.
Yeah, I was gonna say I've never. It's what people think we talk like.
Yeah, no, we don't live in igloos. We don't walk around huskies in this. So some of us have huskies, fine, but not every household, guys. All right, let's get to the topics. As you can see, the topics manager here, a couple of the titles have been cut off because they're too long to fit there. But the first one is unconscious incompetence. And we don't mean any disrespect. Incompetence is, you just should be taken as like the word ignorance. You either know or you don't know. Conscious incompetence, and then we'll talk about some of these others later. All right, let's get right to it, Adara, because we have no time to waste. Get into that first topic. First of all, as the Katina man mentioned, the five stages of trading psychology. That is what we're going to be talking about today. Whoops. What happened there? Allow me a minute to fix my... I don't know what the hell is going on over here. Woo. Okay, so I got to go all the way over to this screen. Just one moment, please. There we go. For some reason, it doesn't want to show up on every desktop. There we go. Now we're good to go. All right. Unconscious incompetence. This is a stage that we all go through. Here's how it happens. You buy a copy of the Forbes magazine and you read about a trader who recently made millions. Great. Good for them. You then go online, you watch a couple of videos on YouTube about traders on Wall Street who live in mansions. They got Ferraris on their Instagram. They got a couple of maybe even Lambos. You then gain interest in the business world and you register online for a demo account. You go to whatever brokerage, they offer you a demo account. You take a few trades, you make $1 in the demo. Then after a few days, Now, lo and behold, you're an established trader. You're good to go, at least in your own mind. You open up a live account as a result of that. Now you're putting real money on the line. You start taking trades without doing any actual analysis. Within a short time, and I don't mean to giggle, you lose your money. And we've talked about this, right? Blowing up accounts. That's what we're all trying to avoid. This stage is similar when you're going to buy your first car. You think buying a car is simple. You go to a dealership, you select a car without asking key questions or doing key research, and basically you find out that it's a gas guzzler and the maintenance is going to be super high on it. You think it's an easy thing to do, but it requires a little bit of research. Soon you realize that you bought a gas guzzler and it costs a lot to maintain. Most traders end their trading career here. You take that big L, you notice that you kind of were a little bit over your head, and you cut it. I would say 60-some-odd% of people end at this stage. You're unconsciously incompetent. You've got a couple of trades under your belt. You feel that you've figured things out, but you really haven't. You're just scratching the surface. So this is stage 1. Stage 2, conscious incompetence. This stage is where you realize how little you actually know about trading. You realize that you need to put much more work into your trading strategy and systems. So you start getting the knowledge from all available sources. You go on YouTube, you start watching videos. You saw the Katina Man preface that video he had there about fear. You read books and ebooks, like the books that we've been talking about here on the show. Trading in the Zone for the psychology. Technical analysis of the financial markets for technical analysis. And you start experimenting with new system and technical tools. This stage can last from a few months to years. It really depends on the person. We're talking about stage 2 here. In fact, 60% of traders at this stage, if they reach it first and foremost, they're going to give up after a few months. Only a handful of traders seriously will make it from here on over. The next one is that aha moment, the eureka moment, the apple on the forehead Newton moment. Okay?
I love that analogy.
Right?
Yeah, that's a good analogy.
This is the moment you realize that the problem is not actually the system, but that in the financial markets, you don't need all the tools that you've read about, like, stochastics and MACD. I don't mean to disparage those. They're obviously very good and useful in different things, but there's an abundance of them, okay? You realize that you can still make money by using a simple moving average, an SMA, if used correctly. You also realize that there's really no real expert who can predict what the market's going to do in the next 20 minutes. There really isn't. There's people that can be more accurate than others, but there's nobody that's foolproof. This stage is when you understand that making money from trading requires more than just a trading system. And you learn that one of the most important lessons, there are trades that will go your way while others will not. And it's accepting that fact and being okay with it, yet still staying profitable. That's the key here. Even when you lose money, you realize that it's just the process and it's not the end of the world. So this aha moment is reached by very few traders. And obviously depending on your personal aptitude, it could vary about how long it takes you to get here. The next, conscious competence. It's really hard to say these words back.
I like that.
Yeah.
Competence.
This is the stage when things are going really well for you. At this stage, essentially, you only make trades when your system tells you to do. If your trading system tells you not to enter a trade, you wait. And at times, you wait for hours until that signal is actually triggered. This is also the point where a great number of successful traders break out, so to speak. And we talked about year 5. It really depends on you. From what I've heard anecdotally, year 5, year 7, maybe this is where this fits in. Though there are times when you take losses, obviously, like we all do, you become consistent with your wins. And so this is the stage where you become a consistently profitable trader. Obviously, L's involved. This stage lasts for around 6 months, give or take the individual. Only very few traders will actually reach this stage. And then last, but certainly not least, unconscious incompetence. This stage which only a few, very few patient traders will reach because it takes years before it can be reached. At this point, trading becomes boring, which is what it's supposed to be. Now you see Sean, he makes a very, like a good, I don't want to say spectacle, it's not the wrong word, but he's a showman, right? He's putting on a show. He's got his viewers, gets excited, he gets you amped up. But truth of the matter is, when he's not on camera and he's printing, he's not jumping, he's not excited as he is on camera. He's just doing his thing, right? You have spent years looking at charts, so much so that you develop a clear understanding of what you like to see in your charts. Entering and leaving trades will become second nature. You get triggered out, you go in, it's just automatic. At this stage, while you take losses, they'll be smaller and fewer and far between. And I know these are like very brief descriptions of the stages, but I feel like that they are important because it shows you, like, in a general sense, the evolution of a trader if you stick around enough to go through these stages.
Well, and I love the way it's like bookended. Like, that's why this article stuck out to me. Unconscious incompetence, and then we ended unconscious competence, right? So it's like literally just how we go from, you go in, you don't realize you're not doing well, then you kind of have that realization, and then I think once you have that aha moment, that eureka moment, the Isaac Newton with the apple moment, what have you, then you're kind of able to be more conscious until the point where you don't have to be conscious anymore, right?
Yep.
It becomes subconscious, which I think is really interesting, and I think says a lot. And I think it's also like, and I've seen some people in the chat be like, oh, I relate to, like, the struggles. It's nice to know that at a certain point, if you work hard enough, if you're willing to work, and you're kind of willing to, like, change your brain and adjust your mental strategy, that you can have success. It's not completely elusive, but you have to work for it. And it kind of reminds me too of that article I was talking about earlier. There was that, I think it was on Monday, that German psychologist that basically said you can develop a trading brain if you kind of work hard enough, right? So I think, and again, it comes with this whole idea of consciousness. I think it's a really interesting conversation, and I'm assuming we'll have a lot of questions here as well, so I'm really happy to kind of, have everybody talk about this. I think it's a cool topic, so excited.
Yeah, and I like how, like, the stages, despite the fact that you can, you don't have to take them verbatim in the way that I read them, but they give you a general sense of the evolution of a trader. Not everybody's journey is going to be the same, a carbon copy of one another's. You may stay at one stage far longer than I, and I may stay at the stage far longer than you. Here you go, Rammer. Okay. What's the issue? It's, we got to touch the mic again. It needs a female touch.
Needs some TLC.
It needs some TLC. Ram's serenading and caressing my microphone over here, trying to get it to stop being staticky. Thank you, Ram. All right, let's take some questions in the chat because we got through that pretty quickly. But I think I was already reading some interesting. Fred, when I'm talking about Sean's energy, I'm not talking bad about it. You're misunderstanding. I'm saying, like, look at him right now. He's very quiet. He's very zen. He's doing his thing. There you go. There you go. That's not what I'm saying. Obviously, it's excellent what he's doing for the show. No doubt about it. You're misunderstanding me, my friend. He's also short AMD 125.75. I'm short the future here at 16,000. It looks like we're printing about 30 points or so here. Let's see if we can get down into some key levels. I'm hoping VWAP here at 15,925. We did a rejection at 16 in the way that we've been talking about. You wick above 16,000 and you reject, and we got a nice rejection candle there. Sharif, how did you learn trading? I started trading small caps during the pandemic, and that's really kind of how I got into the whole thing. Then I started watching these guys, December 2020. It was Sean and Neil and Brendo at the time. Started watching them every day, and then the pandemic ended, and they wanted to fill up the floor with traders, so I applied. I came here. I tap danced on Sean's desk until he started paying attention to me.
I think Sean's getting intercut here.
Look at the futures tank, absolute big boy tank here on the future. Hit it, baby. Oh, the gates of hell. Let's go. Yes. Let's go. Big boy tanking here right on the future. Beautiful 16,000 rejection and everything, and obviously all the other big cappers are moving down with it. the Katina Man is now $1 in the money on AMD, almost $1 in the money on AMD as it rejects that 125 level or breaks down below it, still 6.89%, but a great trade there for the Katina Man. Let's go down here.
There's a question here.
Yeah,
Patrick
go for it.
Do you think AI systems can help you trade, or they can be tools to help new traders? I guess AI systems.
Can you say that again?
Do you think AI systems to help you trade can be tools to help new traders?
Look, I don't know enough about that, but I know that there's an algo room back there. You know that's the algo
yeah, I think you
room
mentioned
right
that.
Yeah.
I didn't realize till you told me, but yeah.
Obviously, they're programming their own thing back there, but we'll have to wait to see what AI does because obviously, you know, AI's its development is just absolutely nuts at the moment. All right, guys, we just dropped 50 points here on the future. I need to show this. So this is what I wanted to talk about. This is 16,000. You consolidate sideways at 16,000. I've been saying this a zillion times. You have wicks up above the level and closes below, and look what happened after that. This is not my trade. This is not my analysis. This is what Arun showed me. He's basically, when you get to that level and you're unable to break it and you're unable to decisively take it, this is typically what manifests after that, okay? Not a hard and fast rule. Nothing in trading really is. But there we go, tanking right now on the future. You know, it's not great for the personal account because I'm giving up some money here on AAPL. Look at the futures tank. Here we go. Back into 15,940. Are we getting close to VWAP here? Where are we at with VWAP? VWAP's in the 30s or the high 20s, 15,929 or 15,930. So good move down on the future. Arun is at home, Jonathan. He trades at home. He's still with the company, not on the show anymore, but he is at home.
He hasn't traded.
He hasn't been trading, eh? Are you kidding? I didn't actually know that. Huh? Well, he said he took the summer off. The Katina Man says he hasn't traded in around 8 months. And so there you go. Well, he did tell me that. I just figured it was for the summer. Yeah. Okay. Yeah. All right. I had a question here that I had earmarked. Oh, there we go. Barry. Blackberry, sorry. I think this would be interesting for a poll. What's the self-assessment for the people in the chat concerning the stages? Yeah, you're gonna have to ask them. I think everybody's is a little bit different. I mean, I don't know if I went through these exact stages, and I'm not even out of them. I don't even know if I'm at the aha moment yet, to be honest with you. No, really. Like, you know, I've been saying this, and I'm going to continue to say it. If you can't prove profitability in the sim, you have no business using real money. It doesn't get any easier. So if you're not printing in the sim, you shouldn't be trading with real money. Unpopular opinion. What do I think about Baba? Win-win. You want to have a look at our friend Baba?
Yeah.
And I'm saying it like that because a former trader.
I figured there was a reason.
Yeah.
Like
he said it by accident on the show, and then it just went viral after that.
Okay, well, it is not on the NQ, so I am already taking an L here. NY, Alibaba. Okay, this is an interesting. It looks like we are appearing to maybe make a lower low here. But yeah, we did have, up until that point earlier today, not a bad upward channel. We had a higher low, we had higher highs. Now we might be making a lower low. We'll have to see if this is a wick or if this is a decisive move to the downside. I mean, not to the downside, I mean like for a lower low for Alibaba. Because look, we actually were having higher highs and higher lows. So we'll have to see where this candle closes off. Look at the daily on Alibaba, because I know it's had a weak run recently. Yeah, I mean, this is a, oof. Okay. Yeah, RIP Alibaba over the last, since August 2023, we took a slow careen to the downside. Lower lows, lower highs. This would be a downward channel if I've ever seen one. But yeah, on the daily, not a bad look as long as it can continue making higher lows. I actually might, I might slide into this trade if we.
What would you not want to see for a long here? If you were long inclined, what would you be specifically not wanting to see?
A lower low.
Bang, bang. Thank you. Like your learning curve is much steeper than mine.
Thank you.
Because it took me a long time to figure that out.
No, I appreciate you too, mentioning that you're not at your aha moment yet, or you don't think you are. Because it's good for everybody here, for myself, and I'm assuming people in the chat as well, to know it takes time.
Yeah.
It's a hard discipline. But I appreciate that. Yeah, just also too, your NQ short inspired
it's a
me.
print factory over here.
I have dipped my toe into a Tesla short. I initially was trying to go long Tesla. I got in it arguably too late, but you know, we adhere to risk principles. I got out kind of when I realized that 242 was maybe not going to hold, so I got out there. For this short, if we get like 240, 250, I'm not giving myself that much wiggle room here because I know how much Tesla likes to fly like a little baby bird, or like a very angry eagle. So I don't know. Tesla though, we do have a decisive kind of short movement to the downside, I'll probably get out 241 is what I'm thinking, just because I like those even dollar moments. But yeah, that's the look on Tesla short. I figured with the NQ short, with the fact it gave up so heavily at that 243.50, I'd like to say,
okay.
Yeah, that's what I'm taking a look at there.
We just bounced off VWAP on the NQ, so I am concerned now. I need to see continuation. Now, look, the trend is still intact for an uptrend. We haven't made a lower low. The lower low takes us below 59. Look how we defended 59 around here. We did the exact same thing, but for the long that we did at 16,000 for the short. We come into 59, bounce, 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 bounce. All the closing prints above 59, okay? So now we do that at 16, but for the short. So we come back down. Lo and behold, what I say, we're looking at VWAP as a level of support. You come right into VWAP. You know VWAP is the white line on my chart. We bounce off VWAP, and now we're in that 15,943, 15,940s, okay? So what I'm concerned about now is that we actually have support here, and then we continue to trend up and take 16,000. I'm going to be very on the lookout for that. Why does that matter to you? Even though you're not trading futures, if you're in any of the Mag 7, you should care about what I'm saying right now, because the Mag 7 highly influenced by the NASDAQ. And so keep your eye on what we do around here. Personally, obviously, I'm in the short, and I'm going to be wanting this to continue south, but it's not about what I want. It's about what's going to happen. What I see is a higher low and a hold at a key support level. It is respecting VWAP on this day. We had a dance with VWAP here, even though you could make the argument around right here it was a 59 hold rather than VWAP, but it's always nice when there is confluence, okay, between either key price level and then a technical indicator or otherwise. So keeping my eye on here. If it comes back into my entry, that's how far I'm going to hold this, okay? I'm going to hold it back into my entry. I'm going to wait for a possible 16,000 rejection if it makes its way back up there. I'm still holding 30% of the position that I've had. So we'll see what we get around here. But nice move on the NQ, rejecting 16,000 in the same way that it bounced off 15.9 earlier in the day. So I just want to make that point clear. Let's go to some questions here. I'm looking for some questions. Steve J says, nice, Sharif. I had the exact same trade. Shout out to you, Steve J. I hope you absolutely print. Professor X says, very true. Sim trading first. Personally, I've lost about 75,000 since I've started a very expensive self-trading experience. Professor X, I'm sorry to hear that. But maybe I won't be sorry if you actually, quadruple that L and you turn that 75,000 into 250,000. And, personally, I'm rooting for you. Why wouldn't I be? So I hope you turn that around. No question about that. But keep it tuned to here, because we're going to try to give you as an honest of an assessment of the markets and of everything as we can, day in, day out. JT37, Sharif, Adara. Since you guys went over MACD lines the other day, I have started using it along with EMA lines and VWAP, and I am 6 straight trading days with 20% portfolio gains. Huge thanks. My man, we're thankful to you because you're watching and you're printing, and I couldn't be happier for you. Shout out to JT37. Keep gaining that knowledge, but don't forget, when you get those days where things start looking bleak again, it's the persistent ones, the ones who stay the course, who are going to make it in this game, okay? You got to stay the course. Longevity, longevity, longevity. Slap Chop Guy making a joke. I love Slap Chop Guy. His damn, you really blow was my aha moment. I'm sure that wasn't the case, but that is a bit of a side slapper there. There should be routine aha moments, says Glenn Smith. Yeah, I guess maybe they're not just one aha moment, but maybe several for people as you discover and you become more in tune with different aspects of trading. I would have to agree with that, Glenn. Good call on that. Let's go down again and see here. Hanny Sammy, I'm willing to bet he's Egyptian. Yeah. Sheriff Best Pharaoh Kid, I'm willing to bet he's Egyptian probably.
I was like, I enjoyed it.
Yeah, I know, that's funny. Shout out to you, Hanny. Sharif, says Casey Corkmess. Sharif, just had to move back to paper account, got caught in the chop this week and hit my max loss. It's having discipline to make the assessment and act upon it. I could not agree more, my friend. The fact that you can pull the trigger like that, get your ego in check, and kind of admit to yourself that I got more to learn. I got more to do. That says a hell of a lot about you, and it shows a lot of maturity and wisdom. So shout out to you.
That's really powerful. Yeah. It kind of reminds me too, like when we were going over Wayne's trading journal, when I said I really liked how he gave himself a B on one of the trades that didn't work out because he was like, I stayed with my discipline. I think sometimes acknowledging, it's like I'm gonna make a weird comparison here, but it's like like AA or whatever, those kind of principles, especially because we're talking about 5 steps right now too, right? Acknowledging that you need help or acknowledging that things aren't really going well is honestly, like, I think a lot of times the first step, and I think something very powerful. And I think even acknowledging that your trading's not going as well as it could be can be an aha moment. Do you know what I mean? Like it's very subjective. It's what works for you. And so I think that's really important, and I appreciate everybody being honest about their trading experiences in the chat here this whole week as we do talk about growth and learning with regards to psychological trading.
Absolutely agree. And Steven just said a very, very insightful thing. I like how you're seeing this, Steven. He's like back to 16K on that higher low. That is exactly what I'm concerned about with respect to this futures trade. We make that higher low. We don't come back into 15.9. In fact, we actually bounce off VWAP. I'm cognizant of that. I'm very alert and alive to that fact. We're going to have to see whether we make it up or not, or whether it's just a dead cat bounce and we actually break that VWAP level. But right now, it looks like we're curling back up again. But that's the beautiful thing about this. I've taken several beak wetters over here with bottom wick on this bad boy and 30% position remaining. Let's see what we get from that move back up. But I couldn't agree more with you. Good assessment on that, Steven. Moving over here, and let's have a look at what people are saying. Eric Hendrickson says, best way to learn trading psychology, read Mark Douglas's Trading in the Zone. Absolutely agree. We've been talking about that book since Monday, since we started. In fact, we actually gave it to people last week, if you recall, when people asked us, when we told everybody we're going to do trading psychology
you were like
this
some homework over the weekend.
Yeah, exactly. Yeah, you remember. Nobody did the homework, let's be real about it.
It's school all over again.
It is, right? No, but for real, guys, Mark Douglas is Trading in the Zone. Excellent read for trading psychology. My only suggestion to you, if you're going to read it, is you need to read it maybe a few times. At least I did, to really internalize it and to really understand the principles, because there's a lot being thrown at you. He tells you about his experiences trading. Training traders and how the different aspects of the traders that were positive and negative. And anyway, so there's a lot to take in, pardon me, from the book. So to me, it took a couple of times around to really kind of understand everything that he was really trying to say. All right, let's see what other people are talking about here. Abel Gomez, some of my success has been to only trade 2 to 3 stocks and learn their patterns, study how they trade, and monitor their behavior. Hope that helps. You're not wrong. You know what the Obi-Wan Kenobi does. He's the Amazonian, right? He lives, breathes, and talks about Amazon so much so that he got a screen recorder to just record the level 2 on Amazon all day. I'm not kidding. Yeah, where is he? Is he there?
Impressive.
There he is.
The dedication.
Amazonian, are you still screen recording level 2 on Amazon daily? Yeah, he gave me the nod.
I like the nod.
Yeah, he gave me the nod. He's still doing it all the time. So there you go. There's people who do that.
That's really cool.
Quickly, let's look at here. There was a good question from Callum Mitchell Miller. Sharif, hi. I find it almost impossible to lose money if I go for quality trades only and always have a stop loss. Never give up. Well, great, man. I mean, I couldn't be happier for you, but you've got to be prepared that, there's going to be an L here and there, right? And it looks like you have a good handle on that because you're not allowing the stop loss to go untriggered, whether by moving it down, canceling it like we've done in the past, etc. I agree with you, and I'm happy for you. Wait for those A+ setups. No question about that. Let's look here.
Lots of love for Obi in the chat.
Oh yeah,
awesome.
Of course. Kevin Johnson, quick question here. What's your commission rate when trading micro contracts like MNQ? I don't know if I'm privy to say that because it might be proprietary to the floor, but it's not that much. It's not that much at all. And that's part of the beautiful thing about trading on a prop floor is that, you know, they obviously negotiate fees with the market makers and we get a volume discount. That goes without saying. Crap stock. Do you know if OB trades Amazon every day? I don't know if he trades it every day, but I'm pretty sure, you know, he's looking at it.
I think he's like, I was gonna say, I feel like he might be considering it every day. Yeah.
For sure.
The level 2 thing is cool though. It's actually really smart to have like a constant record of it.
Yeah, because he loves his level 2.
Yeah.
Right? Like
he's good at reading it too.
Exactly.
Like, so different people have different strengths.
Exactly. All right. Let's see what else here. Gerald Fizz, man, I spent $500 a month, monthly Discord, but the guy is never active. How do I get my money back? I don't know, man. I don't know. Complain? I have no idea how to get your money back from random Discords that you signed up to online. But yeah, James. Oh, I just had that one. James Dell, I like watching level 2 after seeing my levels hit on the chart before I get in. Fair. Yeah, I think that makes you know, a lot of sense. Good for you on that. We don't have much in the way of content today because we got through it super quick. You want to go through it again? Because half past the hour.
Let's do it. Let's continue chatting here.
Yep.
So again, what are our five? We have you know, 5 kind of cycles or stages to trading. Here, and it's kind of about how traders are influenced by emotion and different emotional factors and different emotional processes that traders often go through when figuring out this this crazy thing here. So the first one, unconscious incompetence. In this stage, we all go through. Basically, what happens is you kind of decide you want to look into trading. Maybe you're interested in business. Forbes magazine, for example, you read and you hear about people who are making millions. And we talked about this recently too. There's a lot of, I think, expectation that traders are instantly successful because we hear these get-rich-quick stories. That is not actually the case, right? That is not reality. That is very fallacious. But anyway, so then you start getting interested in trading because you hear these stories that you register for a demo account. So you open a few trades, you make some good money, but then after a few days, you basically start to think, oh my God, like I'm amazing at trading. I am the trader. You know what I mean? You have way too much confidence in yourself. It's like, shh. And so then you open a live account, you start trading without any analysis because you think, oh, well, I did great in my, you know, the demo account. I definitely know what I'm doing, that type of thing, right? But in a short time, you basically end up losing all the money. This is a similar stage when you kind of start buying your first car.
I'm getting out.
Pardon?
Yeah, I got out because we're right back at 16,000 guys. So I got out the remaining 1/3 for break even on the 1/3. I just wanted to make that point clear. Sorry to interrupt you.
Yeah, I got out of my Tesla too, so I appreciate that interruption because I needed that moment in my life. But so basically, this kind of is similar to when you're buying a car. You think that you're buying a car is a simple step. You go to the dealership. You select a car without even asking any questions. Do you do a test drive? Maybe, who knows? But so then you soon realize you bought a car that isn't great, that it's gonna cost you a lot to maintain, it's not right for you. So this stage is a stage where a lot of traders will actually end trading. They'll stop, they'll end their trading careers. And then stage 2, if you continue trading, is conscious incompetence. So this is a stage where you actually realize you're conscious about the fact that you don't really know what you're doing as a trader. You're still very new. There is a lot to learn. It's a very complex discipline. So then you start realizing you need to put in more work into your trading strategy. You start getting the knowledge from available sources, maybe YouTube videos, maybe hundreds of books or ebooks, like we were talking about trading in the zone. Maybe you experiment with different systems and tools, because as we were saying, it's gonna take a while to find a system that necessarily works for you. Do you know what I mean? No two traders are gonna be alike. No two trading strategies are going to be alike. And then from this point, you can kind of learn. This stage can take the longest, and a lot of traders do give up early. So, you know, this is kind of the make or break it stage, right? But then you have the aha moment, or hopefully you do. As we were saying, you know, sometimes it takes time. There might be little baby aha moments, but this is when you realize that the problem isn't with the system, but that you don't necessarily have, you don't need all the tools that you've read. It's going to be not going to be one size fits all approach, right? So you can realize you can still make money by using a simple moving average. There's no real expert who can predict where the market will go. And this is the stage where you kind of understand that making money takes more than just a system. It takes really like you developing your system. It's not going to be like what Jim Cramer's saying necessarily, or always what we're saying. Okay, that was a bad example. But you have to kind of come up with your own trades, right? You have to come up with your own system. You have to work your system, and then you have to practice your system. And this is when you learn that sometimes trades will just go your way and others won't. That's unfortunately the fact of life here. Shout out to that 80s sitcom. But even when you do lose money, you realize that it's a process. And it's not the end in and of itself. You know, these little losses, these little baby losses are part of hopefully greater adult gains.
Bang.
Did not like that metaphor, but thank you for the bang there. Conscious competence. This is the stage where things are hopefully going really well for you. You only make trades when your system tells you to. If the system says no, you say, nah, not going there, right? You're more conscious. You're making better.
You tell that system,
Madeira. Yeah, you tell it you shake your little finger at it like an angry old man on the lawn. But at times, it can take hours.
Get off my grass.
Thank you, yeah. At times, you can wait for hours before your trading signal is triggered. And that's part of life sometimes. You got to be patient. You have to wait for what you're looking for. And then there's also a point where you break out most of the time. There are times where you make losses. You're more consistent with your wins. And this stage is really hard to make, but you know, once you make it, generally, of course, a very good sign. And then last but not least, unconscious competence. So this is, you know, this is the holy grail. This is the moment. We've gone from unconscious incompetence to unconscious competence. We've like flipped ourselves over, right? Like 180. This is the stage where only a few patient traders reach because it can take years to reach. It takes hard work. At this point, trading becomes not necessarily maybe boring, but it becomes more routine.
This is who we all want to become. This is him. He's him. He is him, right? If I was this guy as a trader.
I love that animation.
Love that one. Yeah, I love how we have these. Sorry.
Right, so if you are at that point where you are that man, that very happy, aggressive man, that you've spent years looking at charts, you have a clear understanding of the way you like your charts or your level twos, shout out to Obi, entering and leaving trades will become a more normal thing, and at this stage, while you make losses, they will be more mitigated because you were smarter about the decisions. Also,
absolutely, we had a super chat, by the way.
Oh yeah, I was just gonna say, I'm gonna cut myself off to address the super chat.
Go for it, yep.
Crypto Captain Ron, great name. I'm sure you will be very happy as Crypto Captain right now, given the recent state of crypto. So shout out to you, Crypto Captain Ron. Also, thank you very much for your $5 super chat.
Thanks.
What trade platform do you use? Or what platforms allow you to slide your trade up and down on the chart? Thank you for all you do.
Okay, so we use P-Pro-A.
We do.
Because it's proprietary to day trade the world, and that's the prop firm we're working at. I personally have an account, obviously my personal account with my own money, and that's with Interactive Brokers, and their program, Trader Workstation, allows you to drag and drop the buy, the sell orders, the stop losses, the trailing stops, everything on the chart so you can make adjustments in real time. We're not affiliated with them. I'm not going to show that on the camera because, well, we're not supposed to. But that, I just want to answer your question since your question was quite pointed. Eddie R, Obi is long or short Amazon? Obi, can we know if you're long or short Amazon? Do you mind disclosing that to us at this moment? It's proprietary information. He will not disclose whether he is long or short.
But we need an Amazon corner, like 5 minutes a day, just the Amazon updates. We need like an Amazon corner or something.
You asked me, Obi's got a bit of an attitude.
I know. Well, it's proprietary information, Sharif. How dare you ask him though? Like maybe
we love the Kenobi, yeah.
Also, Michael Wu asking a question to us here that I like, and we've kind of talked about before, but I think it's also interesting with regards to psychological trading. How do you determine your trading size?
Well, that's a very good one. We talked about this yesterday, right? So it's not something that I would just jump into willy-nilly. It's something that you have to incrementally work your way up there because you can't have the same mentality, or you shouldn't have the same mentality when you have a small amount of money on the line versus a large amount. We talked about this yesterday. You have to be prepared mentally for that size. And so I think if you want to be of sound mind, then you need to incrementally work your way up to that size. Also, it really depends on the market in which you're trading. We talked a little bit about this with small caps yesterday. For example, I was explaining to Adara how these small caps, they come in waves. On Monday, I'm just giving you a random example. I'm not saying this actually happened this week, but on Monday, we have a 300% runner. All of a sudden, Tuesday, we have several 3-digit runners all over 100%. They come in waves. When they do that, I should be aware of that situation. And then I can size up into my small cap trades in the same way that I wouldn't when I come in and the highest one on my gap scanner is 25%, 40%, and none of them run after the bell. I need to be cognizant of the trading conditions that I'm in or that are present at the moment. And then I should be able to know when to size up. So also, for example, if you're a trend trader, if you're a long bias trader, do you really want to be sizing up during consolidative times? That's not your modus operandi. You're not a range trader. You've already identified yourself as a trend trader, a long bias trend trader. So wait for the certain conditions to be ripe, ripe for your trading style, and then size up accordingly. And also, before you do that, you also have to be mentally prepared to take that size. So you have to incrementally get it up there. We are not trading options KCOS. We will have 0 days to expiry options soon, in the same way that we're going to have crypto as well. I don't have an ETA for you. We're hoping sometime in the new year. But yeah, we're going to have 0 DTE hopefully real soon on that one. Sharif says gun to bag. Okay. Sharif, Dara, having difficulties pulling the trigger on larger trades, doing smaller trades, which means smaller gains and losses. Did you go through this? Yes. Simple answer is yes. The clammy hands, the heartbeat, the feeling in the pit of your stomach, all that kind of stuff. Been through that. Been through it. And I've said this story a number of times. When I first started trading on this floor, and I spoke with the floor manager who was here at the time. He goes by the name of Greg. And I'm like, Greg, I got the setup, I got the levels, and I watch everything manifest, and I don't pull the trigger, and it drives me nuts. He's like, look, man, you're suffering from a lack of conviction, and you need to figure that out internally before you're going to see success as a trader. So conviction is not something that you just acquire willy-nilly because you're an overconfident individual. It comes from repetition, seeing your setups come to fruition, unfold, print, and then you gain more confidence in the system itself. It's one thing to read in a book or to be told A plus B equals C. It's another thing to experience it firsthand, to have your own money on the line or whatever, whoever's money you're really real money be trading, and to actually see it manifest. So I think that you just need time and you need practice, okay? Ozan, when you say you will have 0 DTE, you mean it will be SPX, SPY, etc., or as you have in commons, you will trade all options, but you need to close it at the end of the day. So 0 days to expiry, options are essentially options that expire at 4 o'clock. And so that's kind of conducive with the way that we're trading at the moment, because we have to be out of our positions, all of it, by 4:15. Otherwise, the floor manager starts yelling, and then you get in trouble. So we're going to have that. I don't think it's just going to be limited to the indexes. Neil, you don't happen to know if the 0 DTE that we're Day Trade the World's getting is going to be index? Yeah, he's not sure. Yeah, he's not sure. And quite frankly, neither am I. So I guess we'll find out when it actually happens, Ozan. We'll let you know. You'll know, obviously. Let's see.
Shout out to Goliath Geo in the chat here. Knees weak, mom spaghetti when trading sometimes. Great reference. Lose yourself. Don't lose yourself in the trade, though. Keep your mental there. Stay psychologically ready. But yeah, no, I had to shout that out. But yeah, I think it's also like, we all, I think, get like that while trading. I mean, I am still paper trading, right? So it's still very much a learning process. But I think it's interesting, too, to think about how the mental aspect will be different. Should I go live? But yeah, I think like always kind of being cognizant while trading and kind of trying to keep the emotional elements in check is important. And I think part of that, as you become kind of more conscious, to use a word we keep using while trading, is I think, you know, if you have a plan set up ahead of time, it's a little bit easier to stay on that plan and get a little bit less stressed out and be less knees weak mom spaghetti over there. But yeah, shout out to that. I loved that.
I'm being told that 0 DTEs aren't offered to individual tickers other than Fridays, says AK. I don't know. You guys know I don't trade options. My understanding and my knowledge of options is very limited, and I don't want to really opine on anything I'm not qualified to opine on. So I'm just going to stay out of that one. Good question from Loser 101. I don't know. I like your name, but would you trade the same way you do with prop money as opposed to your own money? And I actually wondered that before I came here. By the way, before I get to that question, we're going to break out through 16,000 here. So in the same way that we were rejecting 16,000, this is now what I look for a breakout trade. So I should be getting long here. This is a good bump off VWAP on the MNQ and a decisive break of 16,000. Look at that. You got the initial break. You had a retracement just a smidge above 16,000 into 16,005. And here we go. We're pumping up again. It looks like this one is going to run. We're already up 1 1/3% on the NQ. Oh, baby. Are we going to run even more today? Are we going to see 16.1? A good move. I really like that bounce off of VWAP. This is essentially where VWAP was on my chart because we bounced off it. Exactly. I'm talking about my side chart because you know how there's a bit of a difference between VWAP on my chart and VWAP on P Pro 8 because of when VWAP starts populating. But yeah, this is I'm missing out on this trade. Maybe I'll look for a dip at around 16.10 or something, 16.05. We'll see. But to answer your question, Loser 101, I always wondered that myself until I started coming here. I thought, yeah, whatever, it's not my money, you know? I'll just punch rent willy-nilly. No, man, you have to be accountable. There's floor manager and assistant manager, and they have a P&L screen there. Like they have 5 screens, 4 for themselves and then 1 for the floor to see what everybody on the floor is doing. They know what your P&L is. And if you're in a dumbass trade, they're gonna yell at you, close the position, right? So you're accountable. You're accountable. It's not like, oh, because it's not my money, I can just do whatever. It doesn't end up working like that. I got to tell you the truth. Mr. Love Shack. Typically, the 0 DTE is only available for SPY, triple Qs, etc. Okay, again, I got to tell you the truth. My knowledge of options, very limited by my own admission. So I'm not going to say it. Big Kyle Burdett, where have you been, my friend? It's been a minute since we have seen you, Big Kyle. 0 DTE are available every day on the indexes, Kyle says. Big Kyle Burdett back in the chat, baby. Moving down here, John Del Signo. My guy, I wish you took TMF 10 days ago when I bought up the ticker. Check out the chart. Yes, sir. We are going to oblige. John, we're going to have a look at TMF. This is the 20-year trend. Yeah. Well, it's a good look, man. It's a nice little bounce there off 37.5. And we know how this has been doing. Rates been coming down. If rates come down, they're inversely related to bond prices. And so we're moving up nicely here. Good luck. Shout out to you, John. I hope you continue to print, my guy. Looking at the chart, though, do you have any resistance levels you need to be worried about? What I do like, John, though, is that you've broken the lower high trend that we've had holding out here for a little bit. You've kind of broken through that. There's just so many levels on the way down. There's not really one specific level. I guess if anything, I'm really looking at that $100 area. There was several touches around that level, but hope you print. Kevin Johnson says there's supply at 16,033 on the NQ. Thanks for that, Kevin. If you're trading the NQ futures contract, be made aware of that level. Crap stock, bro. Should you take the same approach to trading small caps as you do with mid? No. And I've talked a little bit about this. Personally, when I use my exponential moving averages, I have 4 on there. Okay, the only reason I have 4 on my chart is because 2 of them I only use when I'm trading small caps. So that's a 20 EMA and the 7 EMA. When I am trading the large caps, I'm only interested in the 50 EMA and the 200 EMA. That's number one. Number two, I have a different rule. With small cap gappers, I'll never take it long if it is south of VWAP. I just won't. That's not the case with large caps. Large caps, I'm more interested in clear price action, support and resistance, the closing print. Interests me, the daily level or a key level on the daily chart is what I mean to say. So I do not trade them the same way. No, absolutely not. That's just me. Maybe other people do and they do it with success. I'm not talking about other people though. BlackBerry, Sharif Adera, I think these stages are not carved in stone. They're not, my friend. I'm trading sim on stock market games, derivative on a small account, and investments on a third one. Absolutely, everybody's journey is going to be different, BlackBerry. I don't want you to take this as, you know, only these 5 stages exist and you must go through them in the way that they are articulated. No, we're giving you a general idea of kind of what to expect so that when you get into this game, you're not lost in the sauce, so to speak. Like, you have an idea of where you're at there.
Yeah, no, I think that's I think it's a good point, and I think also because, you know, like someone was saying in the chat earlier too, like I have different aha moments at different times. They were saying, and I was like, I think that's relevant. Like, and I think too, like even Sharif was saying, like, you know, you said you didn't think you had had your aha moment yet, right?
Yeah,
So I think
I don't know.
I think the thing is too, you're gonna view the stages differently for yourself. I just think they're like interesting to be aware of, and I found it to be really cool that we start at unconscious incompetence and we end at unconscious competence, which I think is kind of a powerful way of putting it. And I mean, you know, with every system, as we've been saying all week, A, nothing is set in stone, and B, your experiences will ultimately be very different. But I think it's just something interesting to keep in mind. And I think, like, at least for me, I think it's a little, you know, it's kind of heartening to know that there are other people going through the same kind of processes as you when trading. Do you know what I mean? There's other people too that are dealing with this kind of lack of knowledge that then kind of hopefully forms into proper, you know, knowledge and better awareness. So I think it's a really solid point. I think it's I really, you know, I feel like it's kind of relatable to know that there are people going through some version of these 5 stages, which I think is very cool.
Absolutely. Fat Figure says, my aha moment was getting into the market with no fear.
I like that.
Very interesting. Very interesting. Yeah, it really depends on your journey, right? If that was a key, you know, I don't want to call it a resistance point because it's a little on the nose, but if that was a key problem for you, like, you know, where you have fear getting in, you get the clammy hands or however it manifests with you, and that's not happening anymore, that's a good step. Couldn't agree more, Fat Figure. All right. Let's see, any other questions here? I think there were some tags here that I missed out on. Elon, hi Sharif, at Trader TV Live. Do you guys have daily briefings on each trading day strategy, or each trader works independently? So the guys behind us, they have their daily strategy there. I mean, the future's continuing to run. I'm such an idiot. Should be going along. Yeah, they all have their. They have a trading strategy. They do it Tuesdays and Thursdays. They go back there. The assistant manager, he leads the meeting. Each trader comes in there with, you know, something that they want to discuss. It really depends on week in, week out. It's a little bit different. They do that though. Because we're kind of in the broadcasting end of things, we don't have that, right? It doesn't mean that we don't have access to the group chat, the Discord there that they you know, bounce ideas off of. We do have access to that, but when you're on the broadcasting side of things, it becomes so overwhelming. You can't really, you know, participate in all the different areas of the firm, Adara. All right. Chewy taking off again, says Diamond Realty of Miami. All right, here's what I'm watching, guys. Let's bring in some of the side charts. Ram chart. These are the ones that I'm watching. I'm watching GameStop. AI did nothing. I'll probably take this one off. Chewy curling up here. This is what Diamond Realty of Miami was talking about. Lo and behold, look where we got a rejection off on Chewy. This is yesterday's closing price. Exactly. This is the exact closing price that we rejected off. What a technical level. Closing prints, people, chart them. It takes 1 second. All right. 1936. Was the rejection. We come back down into, is this an important area? Yeah, this was yesterday. It looks like this was a pre-market consolidation area around that 18.5, 18 2/3, and we're curling back up now. It looks like maybe to touch that top. So we'll have to see how Put that in there, Chewy. We'll have to see how Chewy does, but yeah, curling up nicely. We'll see what it does at the dollar level as well at 19, but good luck. Good luck on that. All right, let's circle back and start with the material again, just to reiterate for all those who have just joined us. We are talking about the 5 stages of trading psychology today, okay? The first one, and we don't mean any disrespect to anybody by using the word incompetence, it should just be looked at as you don't know, okay? And there's no bad thing about that. Unconscious incompetence. This stage is one that we all go through. Here's how it happens. Obviously, this is quite anecdotal, but we're going to use it anyway. You take a copy of Forbes magazine, and you read about a trader who recently made millions. He's got Ferraris on his Instagram, maybe he just picked up a new Lambo, this, that, and the other, and he's showing off his mansion in the Hamptons. Shout out to Hamptons Trader. You then gain an interest in the business, and you register for a demo account, otherwise known as a sim or paper trading account. You take a few trades. You make a buck or two. You're feeling yourself now. Then after a few days, you believe that you're, look, I'm good enough. I'm an established trader. Time to trade real money now. You open up a live account. You take trades without doing any analysis. Shortly thereafter, your account blows up. You got no more money, or you're almost down to like whatever. You lose 75% of the money that you had in there. This stage is similar to when you were buying your first car. And I remember when I bought my first car, it's like it didn't matter what gas consumption it had or how much it was going to cost me on maintenance. I wanted that car, and I was going to have that car. But that was probably not the best financial decision that I've made, right? Soon you realize you bought a gas guzzler and it's going to cost you a lot to maintain. Did you go through that? Yeah, that's okay. So the Chilean Nightmare just bought a new car, by the way. So shout out to him. And I don't know, I feel like he might be kind of understanding what I say a little bit here. Most traders end their trading career at that point. When you blow up that first account, they say the market is rigged. I'm outie. I don't need this. I'll just work a 9 to 5. That's good enough for me. And that's the end of it for a lot of people. But some others, they continue. And they come on to stage 2, which is conscious incompetence. What is this all about? This is the stage where you realize how little you actually know about trading and the financial markets in general. You realize that you need to put in more work in your trading strategy. So you start getting the knowledge from all available sources. You go on YouTube. You start watching the Neil, the Katina Man, the Brendo, everybody. You start seeing what they have to say. You start buying books and ebooks, trading in the zone, technical analysis of the financial markets. You start experimenting with new systems and you start taking on new technical tools. You start diving in deeper. This stage can last for a few months to years, really depending on your aptitude and your psychology, okay? And how much work you're willing to put in. In fact, 60% of traders who actually reach this second stage give up in the first 3 months. Only a handful of traders will make it to the aha moment. The aha moment is kind of like what we all aspire, because it means like we're really knocking on the door of profitability, okay? This is the moment you realize that the problem is not the system, but that in the financial markets, you don't need all the tools that you've read about in stage 2. MACD, RSI, stochastics, goodness, there's so many that I can keep going on with. Money flow index, this momentum index. You realize that you can still make money by using the simple moving average if used appropriately. You also realize that there is no real expert that can actually tell you what the market's going to be doing in the next 20 minutes. There's guys that will be more accurate than others, but nobody's got it down pat. This stage is when you understand that making money from trading takes more than a system. And you learn one of the most important lessons. There are trades that will go your way, and there are trades that won't go your way. Even when you lose money, you realize it's just a process and it's not the end of the world. So you understand, I guess really here the point is you start becoming a bit more profitable and you start accepting the losses, and you know that the losses are going to be part of the process. Nobody's 100% accurate all the time. I don't even think AI could probably do that. There'll be other AI to compete with it. True? He has no idea what I'm talking about. He just jumped in there. Conscious competence is the next stage after the aha moment. This stage is where things start going really well for you. At this stage, you only take trades when your system gives you that signal. If your trading system tells you not to enter a trade, you wait. At times, you can wait for hours before you actually get the correct signal. This is also a point where a great number of successful traders break out. You know, we talk about that in year 5, year 7. Again, I've mentioned that to you anecdotally. I don't have the data to support that. Though there are times when you take losses during this stage, you become consistent with your wins. And that's what we're all aspiring to be, consistently winning traders. This stage lasts almost 6 months, and only a very select amount of traders will actually reach this stage, sadly enough. Last but not least, it's the unconscious competence. This is a stage which only a few very patient traders will actually reach, because it takes years before you can achieve it. At this point, trading becomes boring, and I know I was kind of, not critique, but you know, some other people had different opinions in the chat saying, well, trading never becomes boring. Well, I don't mean it to become boring. Maybe the better word here is it becomes more mechanical, more systematic, where the emotions don't fluctuate in the same way that they were before. You take a trade that you see as an A+ setup without thinking a beat about it. You just you punch in because you know that that's the appropriate thing to do in that circumstance. You have spent years looking at charts, so much so that you develop a clear understanding of the way you want your charts to look before you get into a trade. Entering and leaving trades becomes second nature. Without giving it much thought, you know, this is the right setup, this is the right economic, or this is the right financial market conditions for this particular trade, I'm getting in. At this stage, while you will take losses, and you always will take losses, they'll be smaller and fewer and far between. And that's what we all want. We all want that consistency, and we all want to lessen our L's.
Yeah, no, I think it's, you know, and in the words of 21 Savage, we're always trying to just, you know, take less L's and make more M's. And yeah, I think it's a really interesting, I think, way to look at it. And I think it kind of coming across has really changed my mentality on things. There was something here in the chat that I wanted to address. I found it. Darwin, what kind of empirical support does the stage model have? So as we were saying earlier, it's kind of more, I think, like a framework, which is cool, just a way of looking at the trading strategies and the way of looking at the trading journey. Like, I don't know if it's necessarily like a framework in terms of like, you know, it has to come in this order, because, you know, Sharif was saying, like he said, he doesn't know if he's had his aha moment yet. Other people are making the point, sometimes you might have like aha moments every day, or little baby aha moments as you realize a strategy there. Also, thank you, Jay Haas, in the chat, much appreciated. But yeah, so I think that's a really interesting point, and I think I get what you mean. Like, it's not, I guess, you know, in terms of empirical support, I would say it's more like just something to keep in mind. And I think it's something that made me feel a little bit better when I came across it this morning. You know, I'm still paper trading, I'm still in the sim, I'm still very, very new, but I think knowing that it does take time and that it's a process that requires hard work and just kind of conscious ability to rethink through a thing and adapt is, I think, really important. And I think I appreciated seeing this framework. So yeah, I thought that was very solid. But yeah, let's see what else is going on in the chat here. Oh, so yeah, so earlier someone was asking about my Eli Lilly trade. I'll talk about my Eli Lilly trade. Yeah, so yeah, is a paper trade. I got in below this 586. I will admit I probably should have waited for a bit more pullback here. It's getting a little stagnant. If we see a decided dip below that 585, I am probably outie, because it looks like we're breaking out of that channel just a skosh here. But yeah, we're holding about 585 pretty nicely. I don't know if we have enough momentum to continue to ride this high as much as I thought that it necessarily would. So that's what we're doing here in Eli Lilly. Also, Tesla is looking like it might be Compressla over here. So I will discuss this one briefly as well, because I was in this earlier and then just kind of continued to make some questionable directions. So got in this because I was looking at the the daily chart, I was like, I think, 245 seems like a possibility. 245 did not occur. I took the long. I got out when we kind of had this EMA. Then I took it short, and I probably should have gotten out here at this 241.50. I did not, so that was a little bit, a bit of an unfortunate situation. But yeah, just reflecting, learning, not going to do that again. I need to probably wait for more candles of confirmation there. But that is the Tesla situation. Tesla looking very much like a compression. If we continue this compression pattern, science suggests, or history suggests, we may break to the upside because we're up on the day. So I will keep an eye on Tesla maybe breaking this compression wedge and having a little long here from this point. So BlackBerry in the chat, I think what's developing here in these stages is trust in your own perception on every level. Love that. I love that, and I think it's a really good point. It's like, the idea that we have to, trust yourself, but also trust that it's not going to be overnight. You know what I mean? It does take time. It takes hard work, and I think the willingness to learn and to accept that it's not going to be 100% overnight is, I think, a really interesting way of looking at it. So I really appreciate you putting that here in the chat. Because yeah, nothing happens overnight. Nothing is guaranteed. Nothing's for sure. It really does come from that hard work and from recognizing that this might be the general sense of how things will go. These are generally how the stages may occur. Yeah, not a science, an art, as we're always kind of saying here too. So I think that is, yeah, very interesting times. Very good points. Let me see what else is happening. Lots of mentions of MLGO. I'll look at MLGO. Yeah, RIP MLGO. I mean, wow. Oh gosh, this is a descending channel if I've ever heard one. It looks like, like a stiletto heel here. Just swoop to the downside. Not a great look. This one was trending really high earlier. It was on the watch list this morning as well, because we were up like 100% pre-market, and then MLGO decided it needed a little nap. It's been going for way too long. But yeah, interesting point. Just something I wanted to kind of show there. That is what's going on with MLGO. So there we go. Elon in the chat. Hi, Adara. Also for beginners, strong ego to be right is poison. Ask ourselves to be right or to be alive. Yeah, I like that. I mean, I think it's also the idea, there's, the whole kind of saying in journalism, which is the whole idea of it's better to be right than to be first. And that also could be the case with trading, right? And sometimes that might mean you miss out on moves, but I think the key here is not to do what I did on Eli Lilly or Tesla and just let the moves happen without you sometimes. Take some time, recuperate, take a breather, drink some water, and rest, and kind of realize, maybe this movement is not right for you, and there will be another opportunity for you to shine and have your time in the sun there. Also, thank you, Neil, in the chat as well. In trading, it's better to make money than be right. Let analysts be right. Just be positive. I like that. Thank you. Yeah, and I think it's, pardon? Yeah, no, I'm sorry. Yeah, not trying to put you on the spot there, but I appreciated that. Futuristic, better to take smaller wins than bigger losses. Yeah, I think that's a really solid point. I think that's why I kind of tried to, move towards scalping. Although I will admit, I've strayed a little bit from that lately, and I think that's hurt me. If I was being a bit scalpier in this Tesla, I actually think it would have gone fine, because I would have literally just gotten out at this 241.50 and called it a day. So I think maybe, it's a time to kind of reevaluate my trading strategy, to reevaluate how I'm making moves, how I'm making plays here. Even though, yes, it is paper trading, I think if, practicing proper discipline through the entire, scheme of things will, hopefully help and improve things, right? It can't hurt. So I think just being more disciplined and recognizing, as we keep saying, that not every trader is going to have the same strategies, I think really important. And I think I need to be more cognizant of my strategy, which is inherently to scalp. Also, yeah, Tesla pulling back a little bit at this 242. Speaking of Tesla, I will not be involved in Stressla again until I see clear cause, because right now, Stressla is certainly Stressla, and I do not want to be involved when it's behaving this way, because, protecting the mental. But yeah, that is what's going on here. Also, just trying to get out of Eli Lilly, because we very broke down here, and I do not want to be a part of that. So just doing that quickly over here. Yeah, there we go. What else is happening? Proper preparation prevents poor performance. Goliath Geo. Yeah, I agree. Really good point. If you can protect yourself. Check yourself before you wreck yourself. If you're making solid trading strategies, just being patient.
Protect yourself before you wreck yourself.
But yeah, no, I really appreciate what Neil said here in the chat about, let the analysts be right. Just make sure to be positive and to take some profits. Also, I am out of Eli Lilly. Eli Lilly is making me a little sad right now, so we're going to stay away from that for now. Yeah.
So sorry about that. I just had
no worries, no
to
worries.
converse there with some of the powers that be back there, so it took me a little bit of time. Looks like the market's still doing the same dance it was doing at around 16.0 and a quarter that it had been doing when I left. It's been a good recovery, man. What a V-shaped recovery we had here on the NQ, and now we are above that key 16,000 resistance level, though. Nice consolidative area. I still somehow feel like it's a long. I just don't want to punch in because I'm kind of unsure. I saw some people in the chat positing that 16.0 and a third is a key resistance level. So let's go have a look here. Here's the 15. And yes, okay, so they're talking about yesterday's high. So we are still within yesterday's range in terms of the highs. We haven't broken through yesterday's range. So this is going to be an interesting look here. So if we break through that 16.0 and a third, we will probably encounter 16.0 and a half. That is going to be the next resistance level, and that takes us back to the 1st of December when we peaked out at 16.0 and a half. It's a good recovery. It's a bit of a U-shaped recovery when you include yesterday's price action in the mix over here. So you know how Michael Noss feels about the roundy faces.
Oh yeah, buy the roundy face. That is a roundy face.
A little bit, right?
Let's go.
So we'll have a look. I'm going to stay very close. I want to keep my eyes peeled here on the NQ to see what kind of move we're going to get. With respect to Chewy, whoever was saying that 18.5 was a good support level on Chewy, good for you. We broke through. Now we're again above 19. We rejected off a very specific resistance level, 19 and a third. That is yesterday's closing print. We rejected off that very decisively, and we had a reversal candle, a bit of a doji candle there, moving back down into that 18.5. Looks like we're gonna actually hold above 19 now, moving up into that 19 low double digits there. So we'll see how that ends up panning out. But any questions in the chat with respect to anything that we've been talking about so far? We've been talking about the 5 stages of trading psychology, and this comes to us from Day Trade the World. This is kind of like Day Trade the World lesson that we've adopted to bring to you guys. Anything you guys want to ask us about that, about our personal experiences? Adair and I, Adair is still obviously a newer trader, about, a couple of months now, right?
I guess a couple of months now. Yeah, I mean, I don't feel like I have the experience worth of a couple months, but yeah, I think it's been roughly a couple months.
Well, it's whether you feel it or not, it is. It's been.
That's fair. I appreciate that. Yeah, I mean, it takes time to learn. Yeah.
Fair, yeah. I'm trying. You are in a very good spot. Andrew Salazar, what's the best way to average down? Andrew, we've talked about this on previous episodes when we talked about making a trading plan. Dollar cost averaging is not a bad thing, okay? But it needs to be planned. What is bad is unplanned dollar cost averaging, DCAing, okay? Why? Because you have to have an understanding of what your risk to reward ratio is before you get into a trade. So some people, they want to espouse a 1-to-1. Some people are 2-to-1, and even more aggressive traders are 3-to-1. If you don't know what your risk to reward ratio is, then how can you plan how much risk you have if you haven't already pre-planned dollar cost averaging? So the way that I would suggest to you to incorporate DCAing is if you like several support levels or several entry levels for a long on a particular instrument, you need to factor into your risk to reward what would happen if your second or third, however many dollar cost averaging levels you have, if they all triggered and then you get stopped out of all 3 or 2, whatever it is. So say I get in my first entry, $150. I have a DCA set up at 149.50, and then I have a third DCA at 149. I need to assess what my max loss would be if all 3 orders triggered, okay? And then take that max loss and see if it fits in with my risk to reward. Now, my risk to reward has to be influenced by where I anticipate the stock will run to. You're going to say, Sharif, well, how the hell do I know where it's going to run to? Well, that's why we use resistance levels. We look to key resistance levels as area where we'd like to take profit. May not always get there, but you have to have a trading plan going in. So if you haven't factored in your dollar cost averaging ahead of time and it hasn't been factored into your risk to reward analysis, my personal humble opinion would be do not DCA. It has to be pre-planned. Okay, I hope that helps.
Times.
Yeah, good times. Adara LePage, the Piper says, how confident would you be trading your own money now alone?
I like the sim, and I think yeah, to answer your question, I appreciate the question. I think being quite honest, I think that there is a learning curve for trading, especially as someone who had no experience before coming here. And I basically only trade on the midday, right? Like I've said that because, you know, you were talking earlier about the broadcast side. Yeah, like, I mean, I am much more on that side, so I mostly just trade during the midday. You know, it takes a little bit of time. I think it's a solid question. I think, honestly, I would like a little bit more sim experience before kind of hopping in there. But I think, yeah, hopefully the more time I spend around the market, the more comfortable I will be. But I think there's a big difference, too, between identifying a trade and actually being able to handle yourself while you're in the trade, which is kind of what we're talking about this week. So I think I would like, you know, to have a bit better grip on myself, I think, in terms of the emotional side of trading before I go off on that way.
I have a question I just want to answer here
sure.
from Atif Tabet, okay? Asking how I feel about Enbridge. Well, before I look at the technical side of Enbridge, because it's a down chart, I want to tell you how I feel about the fundamentals, because I listened to a fantastic podcast the other day where they went through this particular name in detail. And here's the look. This company is acquiring hand over fist other companies, all right? It's burning a lot of cash. At the same time, it's continuing to pay out an aggressive dividend. All right. At some point, all this acquisitions that it's doing, or it's going to either have to give up the acquisitions that it's making, or it's going to have to lower its dividend. There's just not enough cash on hand to sustain this at the moment. So I am concerned about them paying out the rate of the coupon that they're continuing to pay out. Now, it's a good company. You're going to say, well, look, utilities, they've got their hand in everything. They've got their hand in nat gas. They've got their hand in utilities. They've got their hand in energy and other sectors. I'll tell you after, Neil. Yeah, because Neil just messaged me something. They've got their hand in a lot. So my personal opinion is management there needs to kind of make a decision about which way they're going to go, because if you factor in that we're going to be at higher rates for longer, it's not going to be easy to go into the money market and raise funds like they did in the past, which was basically the vehicle that they were funding their acquisitions from. So I have an issue with that in particular. Now, with respect to the technical level, here we are. We peaked out, at least locally, in May of 2022 when we got to around that $48 level. And then you tell me how you feel about this chart. Lower high, lower high, lower high, lower high, another lower high, and all the while making a plethora of lower lows as well, some worse than others, okay? So we have a downward channel here, no doubt about that on EMB, and I'm not surprised. Well, you say, okay, well, utilities have been absolutely murked in 2023. They have been, right? They're counter-cyclicals, and as tech runs, utilities retreat, or what other words you want to use. So I would say until you get a very clear trend change. Now, there's two things you can look at here, Atif. You can look at, number one, the break of this trend line. You can use a couple of rules to determine the break of the trend line. One, you can use the 3% rule. If you don't know what that is, Google it. And you can use the 3-day or the 3 candle rule, where you're looking for 3 straight candles closing above that key resistance level. The second thing you can look for is the making of a clearer higher high. So you're going to have to identify a crest or a peak, and you say, okay, I'm going to work off that one. And you're going to wait for the break of that crest with on a closing basis to say, okay, well, we've had a decided trend change here. So that's just those are the two takes that I have from a fundamental perspective and from a technical perspective. I'm not the biggest fan right now until they can shore up what they're doing. The coupon is too expensive. Their acquisitions are too aggressive. And that's how I feel about that. Yeah.
Also, some in the chat as well. Thank you, Fat Figa. Daryl LePage, you're a great addition to the team. I wish you plenty of profitable dreams with unimaginable reach. And then a little emoji with the dollar eyes and the, yeah, I appreciate it. Very nice of you. Also, I like this question as well from Life Without Grass TV. Great name. Biggest loss so far, asking me. Honestly, MetaConnect was unfortunate. Again, it's all paper trading too, so not real dough. But the MetaConnect conundrum, the sell-off, that was very early in my my trading experience, and basically that was when we kind of all sold off all at once. Quite a moment. Yeah, I think also though, in general, I feel like there have been more L's when I do not scalp. So I'm trying to get kind of back into the scalping habit because I don't know really why I moved out of it. I think it is kind of more my style. And I think we were talking about you need to kind of figure out what your style is going to be. Oh.
Google and AMD, says the Katina man, are both up 7% each, but what he doesn't know is AMD is up 8.25%. AMD is rocketing to the high side with 63 million shares done on the day. I'm sorry to interrupt you.
Oh yeah, no worries, no worries.
But wow,
That's
Google,
crazy.
both Goog and Google are both 6.5% each, Adara. So we're rocketing up here, much in the same way that we are rocketing up on the future. I feel like a dang idiot not having taken this long. It was the consolidation above 16,000 that we were talking about. I doubted myself. I shouldn't have done that. Yeah, it's a hell of a long. We're up now 1.5% on the NQ. Very good day. It's basically doubling up the ES. The ES is up 0.75% and the NQ is up 1.5%. So it's very much outperformance today by the NQ, meaning that tech is leading the way. We did come into that 16,050 level that I've been talking about, which takes us back to December 1st as a resistance level. So we'll have to see how we trade in and around here. Let me show you on the 15 exactly what I'm talking about. We've broken through that 16 1/3 that people were talking about in the chat, but that takes us to, like I said, the first when we came into 16,050, and we're right there right now. So let's not get too carried away here and see how we trade. Let's see if we can break above that level. But beautiful, beautiful day for tech on on the day.
It's Thursday, yeah, I'll put it that way.
Yeah, I like that. By the way, I want to mention this 195 level on AAPL. Very nice level here. Look how many, you're short Apple? The Katina man is short Apple, so he's thinking what I'm thinking here. Look at how many times we've come into 195, 1, 2, 3, 4, 5 more, because like all these ones are basically touching 195. I'm talking about these smaller candles over here. We've been basically touching it since 9:45, and we've been rejecting off 195 for the entire morning. Okay, the only thing that concerns me a little bit are these higher lows. So we dip in here around 955.10. We make a 193.90 low, and then on this dip over here we stay above 194. And now over here, we're holding that 194.50, 194.60. So are we accumulating here with higher lows and a flat top? You guys know what that is. What is that, Adara?
Higher lows and a flat top would be an ascending wedge or a flat top break. Choose your parlance of choice there.
I like it. I like it. So it looks good on AAPL right now. We'll see, but that 195 level obviously posing a challenge. I haven't looked at the book to see how it's been trading or what kind of size is sitting at that whole dollar level, but just looking at the chart, you can tell something's afoot here with that 195 level, Adair.
Yeah, I mean, very, very interesting look on all of these. Like I said, I'm finding it a little bit harder to find stuff to trade today because I think a lot of things are near high of day. And as I have said, if it's near high of day, I stay away. I haven't said it like that before, but now I will. But yeah, I get a little bit cautious because I like to have ranges. I like to know what area in which I can kind of jump around and trade within. And it's really hard to have that in something like Meta or Google, which are both very strong, but there's kind of no wiggle room. There's nowhere to really go because we'll go to the high side. But, and I mean, I had that issue kind of with the a skosh of perhaps trend chasing with that Eli Lilly debacle earlier and the Tesla debacles plural earlier. So just trying to be a little bit more patient with these paper trades for now. That being said, Google, if we see a bit of a dip, I could be intrigued. I could be enticed. Google's looking great. Meta, I've also had my eye on. I was trying to get in this at a 327 dip, or was it 326? The thing's moving so quickly I can't even tell. The point is, we did not get there. Meta is too strong, but there have been nice little baby dip opportunities here on Meta, so I will keep my eyes peeled. Because yeah, very interesting look here. Meta looking great on the purple llama, which is a name. It's a name. It's a catchy name for its new safety development related thing. I think that's really interesting. Also AI related, Google AI related, AMD, which I haven't much looked at. AMD, shout out to Sharif there. AMD up 8% right now. Okay, AMD is beautiful. This might be my dip opportunity here. Because this one has pretty solid, consistent dips. This or Meta, I'm still keeping an eye on for dips.
What's your plan here?
Well, if there's like a dip, if it's like a higher low, you see a little bit of a drop,
nice.
I might get in there.
Okay.
I'm not just gonna get in like here though, right now.
What a rocket, eh?
Right, exactly. And I think like if it makes sense for me to get in, I will get in, but I'm not gonna be hasty either.
This stock would be at 15% if Lisa Su didn't wear the purple jacket yesterday and she wore the blue one.
Yeah, so Sharif
If
is
Lisa
really
Su
upset.
wore that blue jacket, we'd be at 15%.
So Sharif's theory is that Lisa Su missed out by wearing her very lovely, admittedly lovely purple jacket. I'm joking, and then but instead she did not wear the blue jacket.
Dang it, Lisa.
Blue. She wore the purple instead. So now the stock is only up 8%.
Only, right? Yeah.
We're just joking. We're just joking.
Yeah, of
I love
course.
her jacket. But yeah, there we go.
Several questions here in the chat, guys. T. Blanc, wouldn't the falling oil prices help stocks like AAPL, like I mentioned to you in the chat? A lot of these airlines, they hedge jet fuel prices months and almost sometimes years in advance. That's what future contracts are for. So while it does have an impact on them, it doesn't immediately impact them, okay? Nickit, hey, can you look at Visa chart on intraday? We'll look at that in a little bit. We're going to restart the lesson. Elon, hi Sharif. Jamie had very strong words on crypto yesterday. Your viewpoint on crypto. I don't agree with our friend Jeremy Diamond. No, we know his name is Jamie, but I don't agree with him. If you ask my personal opinion, I think he was trying to cater and he was trying to play to the senators because he knew that they weren't fans of it either. And specifically, there were senators on there, and I think you know exactly who I'm talking about, that are not fans of that. That's my personal opinion. I don't have anything to back up that opinion, but I'm entitled to an opinion around here. Uber testing highs. Yes, says I see Manuel Palma's comment, and I see Michael Wu. Uber just rocketed up to $60.55, pulling back a little bit now into 60 1/3. Very good day for Uber, up 1%. It continues to grow after its addition to the S&P 500. It's been profitable for 2 straight quarters. It's been a good look for Uber lately, despite the fact that they've been having challenges with Uber Freight. Food delivery and ride hailing continue to carry the brunt of the earnings on that company. So good look for Uber on the day, no question about it.
Yeah.
Let's go down here and see what other comments. All right, I think we're good to go. Do you want to restart on the lesson?
Rewind.
Let's go.
Yeah, so basically, and some people were saying earlier too, like, oh, like how are those put into practice? Like, is there empirical data? It's more of a state of mind, I would say, than like a step-by-step type situation. But here we are. We're going to talk through step-by-step because these are some of the mental processes, mental aspects that traders have to go through. So there we go. So first, number one, numero uno, unconscious incompetence. So to use an anecdotal example here, perhaps you go to, you're going to the magazine stand, you find a Forbes magazine, you read about a trader who made millions, self-made millionaire. We were talking about how there's a lot of myths around trading. A lot of the kind of thought process around trading is perhaps like this whole idea of, instant wealth or instant gains. Then, you read this article, you get very interested, you go online, you watch videos about Wall Street traders, maybe you watch The Wolf of Wall Street, you want that life, you want the Ferrari, you want the Lambo, and then you get interested, you get a demo account. So then you open a few trades, you're making some good demo money, and then you decide, well, now I've had 2 days of trading, I've got this, I'm an ace. Then you open a live account, you start a trade, and you just start getting into trades all willy-nilly, no analysis, no thought processes, et cetera, because you haven't had the time to really think through everything, right? So then this stage is actually really similar to buying your first car. So you think that buying a car is a simple step. You go to a dealership, you just get a car at random without asking any questions like, the consumption of the car, how will it go, what kind of shape is the car in, and then you end up buying a really expensive car that you could not maintain, that you were not, having the mental energy for, and it does not go well. But then if you decide, maybe you'll sell the car, maybe you'll stop trading at this point, but maybe you won't, and then you'll go to stage 2, which is conscious incompetence. This is basically when you realize how little you know about trading. This is when you realize you got to put a little bit more work into your strategy, that it needs work, that it's not something that can happen overnight. You recognize how are, not living your best life necessarily as a trader. You start watching YouTube videos. You'll start reading books or ebooks. You'll start experimenting in new systems. In Sharif's case, he said he started watching Trader TV and then hounding Sean to press the money button. We'll all have our own journeys. Oh, thank you.
He did that. That wasn't me.
I appreciate it. There we go. So this stage can last from a few months to a few years, and only 60% of traders will 60% of traders usually will give up according to this. But then if you continue going, then you will get to stage 3, which is the aha moment, the eureka. The light bulb goes off. You're like a little cartoon animal having your moment of realization. And then this is when you realize the problem isn't with the system, but it's with you. No, I'm joking. It's just that you don't really realize everything you need to know yet. You realize that the financial market, like we were talking about, not every indicator is going to be useful for every trade, right? Not every trading strategy is going to be useful for every trade. It's not going to be useful for every stock. It just isn't. And then you realize that you can just use, one simple strategy. If a stock is interacting with VWAP, maybe use VWAP as your point of entry. Maybe you're using chart patterns for that particular stock, and you realize there's no expert that's going to predict what the market's going to do in the next 20 minutes. That is not really fathomable, especially not consistently. And this is when you understand that making money takes more than just a system. It takes dedication, it takes a plan, and then you learn one of the most important lessons. There are trades that will go your way, and there are other trades that will just not go your way. And then even when you lose money, you'll realize it's just a process and not the end in and of itself. And that's when you get to conscious competence. I love this. This is the stage when things are going well for you. You're living your best life. Also, I'm going to interrupt this for a $3.05 super chat from Diamond Realty of Miami. Thank you, guys and gal, for an amazing show. #305. Thank you, Diamond Realty of Miami, for a very on-brand super chat message and price. 305 to my city. Shout out to Drake. But yeah, so basically, conscious competence, things are going well for you. You're making trades only when your system tells you to do so. And if your trading system tells you not to enter a trade, then you say, nah. You old man finger wave your finger at that trade, and you don't get in. And sometimes, requires a lot of patience. It'll take hours sometimes for you to enter a trade. It will take its sweet time, but that's why you're kind of making smarter trades. This is when you might have your breakout moment as a trader. You're more consistent with your wins. You're taking less L's. You're making more M's. And then you'll eventually realize, not conscious uncoupling, like, shout out to Gwyneth Paltrow, unconscious competence. Stage 5, this is what we want in life. This is the stage where, you have to be really patient to reach this stage. This is like, the apex of your mental trading journey.
Apex.
Because it takes years for it to achieve. And this is when trading becomes, boring is the word that's used here. I would say more, it kind of becomes routine, more mundane. You get more used to it. You can just be focused and doing your little trades. And this is, this is when you spent years looking at the charts. You have, spent your time, you're entering and leaving trades like a normal thing. And then when you might still take some L's, you might still make some losses, but they're more mitigated with a G. And
all good.
You're making, just smarter choices. Also, thank you everybody for the lovely support in the chat here. Everyone making some great comments. Give Adara a cookie. Yeah, I'm done. That's cool. 5 stages. Sorry, I kind of ran through them there.
Oh, no,
but
I just wanted to make sure.
Another stage, which is shouting out Benzinga.
Yes, ma'am. We are brought to you by Benzinga. Use the link in the description for Benzinga's greatest deal of the year, including 75% off Benzinga Pro. Monthly subscriptions now as low as $49.25 a month. The everything terminal for retail traders. Visit pro.benzinga.com and use the coupon code TTV NOV, that's TTV, NOV, to save 75% off now. New subscribers only, and like everything in life, conditions do apply. So shout out to the good folks at Benzinga. And by the way, we should mention that Adara is a habitual user
You're
of
always shouting
Benzinga.
this out, but it's always very true. If you give me a moment, it's definitely open here.
Yep, bring it down, baby.
Here we go, we did it.
And you want to show them the drop-down feature because Brenda was showing them that for the news items. So you've got a couple of news items there. You want to be able to click the story, but you don't necessarily want to get away from the page. So they got that drop-down list, which I do
and then
like.
Also, lots of details. You can scroll. You've got a calendar. You've got a watch list. You were telling me about the market movers here. There you go.
So that's a scanner, guys. And we're going to get to that week when we talk about how to find stocks to trade. Scanners are great for small cap gappers. I typically use my own watch list for the larger stuff, but for the small cap stuff, it's definitely the scanner that gets my attention there. Thank you, Adara, for that. Absolutely. All right, let's go into the chat here and see what is being spoken about. Michael Wu was asking a really good question. He's like, any advice or any tips about how to increase your patience? And I was like told many different things by many different traders over the years. Meditate, deep breathing. Maybe those are kind of like a little bit interchangeable there. I gotta tell you the truth. It's practice, practice, and more practice. Why? Because I think that I was getting out of positions because I was unsure if the level I charted would actually be reached. So I was getting scared and I wanted to lock in the profits that I already had in the bag. But the more you see, the more you become convinced that these are levels that don't just exist on the chart. They're there for a reason. And when you see them trigger, it creates more confidence in your trading. So when you earmark resistance levels for profit takers, you do that once and you do that 100 times, you're more likely to believe that the position that you're holding will actually reach that level. It will reach the summit, so to speak, and then you'll be less inclined to want to take whatever money you've made and get out of Dodge, right? So that's what my suggestion to you would be on that one. Look, moving down here with respect to any other questions. People are like, yo, Adara's on fire, bro. Because you were dropping like hot lines during the read there. BlackBerry. I have no idea what this individual, the chief of Tesla supercomputer project, left the company. No idea. I can't comment on it because I haven't read it nor heard about it, but thank you for that.
There's a comment from French Tunisian that I like here.
Go for
I think the problem, so you got great name, French Tunisian. I think the problem in the industry are lucky people. The quotes are not my own. The quotes are from quoting this. A ton of people just go all in, and a handful of them turn out to be right on every single trade. Probs. Hence, big expectation from the masses. Yeah, and I think, like, I really respect you saying that because we were talking about the whole mythos, the myth of getting rich quick in the trading world. Do you know what I mean? Because you hear about one person that does it, and then you think that, this can also be your life. But the thing is, and like, the main thing I realized when I started, paper trading and everything here, when I started here, was basically that it is so hard. Like, I have so much respect for everybody who trades, everyone in the chat, everyone on the floor here, because it takes so much work and discipline, and I think understanding the charts and the market is all a part of that. And I think you're right. Like, I think we can get warped. I think our senses and our understandings can get warped when we see people just crushing it with trade after trade. Because the thing is, if you're seeing these people, on the internet or in Forbes, stuff like that, maybe perhaps like, oh, like we made this amazing trade. Yeah, it's a flex. You're not really thinking about everything in the that really goes on behind the scenes there, right? So I really appreciate you saying that. Food for thought, nice little meal there, lots of protein. Also, Tony 101, I love the name. For day trading, which candle is best, 1 minute or 5 minute help? So we kind of say, like, different people have different time frames and candles that they use, right? I like the 5 minute on my main charts and the 3 minute on my side charts. So for the 3 minute, I like the side charts because it can kind of give you like a sense of, you see a bit more candles on the 3 minute. So for my side charts, if I'm just glancing over and I see, a lot of green candles in one direction, a lot of red candles in one direction, I get intrigued, my radar goes up, my spidey senses are tingling. So that's why I like the 3 minute for my side charts. 1 minute, I mean, Sharifa said on some of the small caps, you said 1 minute's a bit more helpful, right?
Oh, yeah.
So small caps can make mega moves in a minute amount of time. So that is, that's the deal here. That's the vibe. What is going on there with the candle? I appreciate your question. I think the thing is too, is you will get a sense the more that you trade, the more comfortable you become. then you will be more like, you know, you get a sense of what candle you like. I started with the 1 minute when I first started, and I mean, because I like trading mega caps, that wasn't necessarily conducive for me. So you really get a sense, I think, as you begin to trade. There you go.
Bang. You're getting some love in the chat here.
Thank you, everyone.
Somani Beats. Thanks, Adara. You're a super fast learner yourself. You're really impressive. I got to say, you are a very fast learner. To be honest with you, I got to give you credit where credit is due. All right, the future has been knocking on the door of the 16,050 for a little bit of time here. We've been putting in several higher lows and several higher highs. You know, this is a really good look, especially with Apple knocking on the door of 195. If we get a flat top breakout on Apple, I feel like we're gonna really continue to run here on the future. Look at this. It's been upward channel galore this morning on the future. It's been holding up quite nicely. If I can just adjust this level over here. That looks like a hell of an upward channel. I don't necessarily want another 16,000 touch, but well, you know, obviously that won't be really up to me at this point, but it's been a good move up here, 16,056 on the future. We've been looking at the 15 and charting from December 1st when we got into that 16,050 area. We were already broken through yesterday's highs, which was you know, at 16,000 in the third. So we're right back at the December 1st highs here to see if we can break through that channel. But maybe what's more appropriate here is a dip trade at 16,000. That's what I'd ideally like, but you know, we'll see what we get. Havana Woody, am I psychotic for holding the CYTO long from 37-cent entry, or is it going to break through 65 this time? What's the bail zone? Let's have a look at CYTO and see what is up with that. Let me bring in my trusty side chart. Here we go.
I like the am I psychotic there.
I know, right? All right. Yeah, this is one of those ones that has to take an hour to load again. And so sorry about that. I'm going to have to wait for this bad boy to load any day now, CYTO. Eh? Okay. Well, apparently I'm being scolded for the earnings count. Do we have any good earnings today?
Lulu.
All right. I'll get back on it. I'm being scolded here for not updating the earnings calendar, because typically what we do is when we're in the midst of earnings season, then I have to do it every day. When things calm down, I stop doing it. Yeah, it's basically I'm getting fired here, but no. The Katina man didn't like that comment. No, in all seriousness, no. CYTO, let's have a look at what CYTO is doing. He's been holding it from 37 pennies. So I'm assuming you bought it several days ago, because we haven't been at 37. Well, yesterday we dipped into 37 pennies. So I'm assuming you got the bottom yesterday, because that literally is bottom wick from yesterday's price action. And look, these are obviously the pivot point levels. You'll recall this from Friday, right? So the yellow line is the actual pivot. Light violet is R1, blue's R2, purple is S1. So you bounced off that pivot point to the T. It was a good look. I don't know. I don't think you sell here. Let's zoom out. Maybe go to the half-an-hour chart. See what CYTO has been doing. Okay. So we had that big move on November 29th and 30th when we ran up and knocked on the door of $1. I think I've looked at this already. 95 pennies. We kind of gave up the ghost the next day on the 30th, where we tanked all the way back down to that a third of a penny area, and then we continued to make lower highs and lower lows. That is until, of course, the December 5th move when we bounced back up there at 1 o'clock. I was assuming that on news. We had a bit of a compression pattern, and then we continued to run yesterday. Today is an inside day. We are below yesterday's highs, and we are above yesterday's lows. So we're very much kind of like in no man's land at the moment until we definitely get that break above that 2/3 of a dollar area at around 68 pennies or so for this to run. Look, I don't think you're doing a disservice to yourself by holding. Perhaps if we make a newer low, I know you probably don't want to give up this much, but if we were to break that 47.5 penny area, I would say definitely bail out there. That will leave you about with 10 cents of profit or so. But yeah, today is a bit of a day of indecision because we are within yesterday's within yesterday's low. Let's see what we look on the daily candle. Do we have a bullish engulfing candle? No, so technically today we did make a bit of a higher high, not by that much though, 66 pennies, while yesterday we were at 65 pennies. So definitely not a bullish engulfing candle there. But yeah, kind of hard to say there. You know, I don't know too much. Hope that helps. All right, BlackBerry, Adair, Sharif, is PayPal a long-term trade now? Nice head and shoulders on the daily coming from a downtrend. So if it's coming from a downtrend, right, what you want to see is an inverse head and shoulders. You don't want to see a head and shoulders pattern on the downtrend. That's not what we're at. A head and shoulders pattern is a reversal pattern. So it reverses the down or the trend that preceded it. Let's have a look.
I think they maybe meant inverse head and shoulders.
Maybe, okay, let's have a look.
An inverse head and shoulders.
Sure.
Kind of.
On the daily, let's have a look here. It's being distorted by the pivot point, so we'll just get rid of those.
It looks like a nice warm sweater.
Right.
You know when you put like the pilling on the sweater?
Yeah, look, I don't know if I see an inverse head and shoulders here. I got to tell you the truth. I still see a downward channel. I hate to be that negator, you know, the negative superhero or whatever, but yeah, I still see lower highs and lower lows. Personally, that's I'm not a big I don't see the inverse head and shoulders. Yeah, I see what you're looking at with this obviously being the head, and then, you know, I'm assuming you think that's the left shoulder, and then whatever this is the right shoulder. I would respectfully disagree. I would say we are in a continued downtrend until you can break decisively through this upper trend line, and I definitely would wait for a higher high, okay? Above that $75 area, maybe even $77. So that's the way I see that one, Adair. What else we got over here? Yeah, Mike Zed, inside day I was incorrect. I didn't actually see the daily on that. We're not an inside day on CYTO because we made a higher high above yesterday's high. So I kind of viewed it a little bit on the 15. Figured we were a bit of a inside day, but on the daily, I do agree with you. We were definitely not an inside day on CYTO. All right, any other questions? Guys, 12:45, bit of a slower day today. It's definitely not slow on these markets though, but anything you want to ask Kaderai, put it in the chat. I don't know what the Katina Man and the Neil are into. They're away from their desks. When they get back, maybe we can talk to them about that. Manuel Palma wants to have a look at Amazon. Amazon has been an absolute rocket today. Oh, yeah. It is up 2.17%, higher highs and higher lows here on AMZN as it knocks on the door of that 148. 148 takes us back to yesterday's high, Adara, that we had on the opening range break. That was where we rejected yesterday, so I'll definitely be looking at 148. So far today, 147.92 is the high, so we did actually find resistance there, and then we trended back down a little bit into that low or mid 147s. Let's zoom out a little bit more on the 15 here and see what we got on AMZN. Does that 148 come back into play again? Not really, right? A bit sporadic. We're talking about 148.5 here, 148.5 over here, and then we had a 149.25 touch over here. So we'll have to break through yesterday's resistance. Obviously, kind of looks like some of the other big capper names we've been looking at today, where we had a big move down off the open yesterday, and then we've been curling right back up to touch those highs. Do we break through those highs? So time will tell. But a good look on AMZN right now. Higher highs, higher lows. This is an obvious level of support. It previously acted as resistance. Look, we got into that 147.25, tanked back down, held VWAP, and then consolidated sideways just south of that 147.25, rejecting off at multiple attempts, and then decidedly breaking it. So what I'd be looking for, possibly, if we don't continue and break through 148, is how we trade at 147, 147.25. Do we hold that former resistance level, now support, or do we come back down to VWAP around 146.75? So we'll have to wait and see what we get on AMZN there, Adara.
Yeah. Susanna Pena in the chat here saying, hi, Derek, can you please check Tesla? Well, thank you. I may.
Tesla?
Tesla.
Tesla.
Besla. Earlier, I thought it was going to be Compressla. And then we did break to the downside off of that, so that would be a no. But yes, I will continue to come up with all the Tesla-related puns here. But yeah, here is, right now, Tesla, I would say, a little bit stressla. So Susanna, I don't know if you want to look at the daily, the intraday, the 5-minute, what have you. I'm gonna have the 5-minute on right now. We had a really nice upward channel earlier. Then we kind of, I caught long here. Maybe I shouldn't have. I got out when we broke below where the EMA was at that time. I got out. Then we made, you know, I got short and then I got out a little too late there. But yeah, so this has kind of been, and then I thought maybe we were going to see, you know, like we had a higher low, maybe we're going to see higher high. Then when we saw this lower high, I was like, we're compressing. Then we weren't really compressing. We moved to the downside. I think a key level for Tesla will be, what do we do at this 240? And the reason I say 240 is because that would be a new lower low for Tesla since the, you know, the lowest low that we've had in quite some time. So if we break below 240, I may go short. I may take off the heels and go short on Tesla. For now, though, I would like to wait and see. I'd like to bide my time because I think I got in on this one a little bit too early both times. So I think the best, my best strategy for myself with this one is patience. Or if I was going to short, I probably could have gotten short around this 241.50, which I didn't. So I would just like to, you know, sip some tea, take some time, relax, decompress, decompressla. I have to. Damien Oliveras in the chat. Depressla taken yet? No.
Depressla.
I love that. I love that, Damien.
That's fantastic.
You know what? I'm going to try to use the bang button.
Bang.
It doesn't work. But
Oh, I'll do it for you.
thank you.
Oh, how come your bang button doesn't work? Is your
It's not
Stream
set
Deck
up.
open?
I don't think it's
Just
set
type
up.
in STR. There it is.
Oh, there
Click
it is. Okay.
All right.
I've never used it.
It take like 1 second to
Exciting
load.
times. But yeah, I appreciate
There it is. Now
the,
try.
oh, there we go. We're set up. It's
Oh,
okay.
yeah?
No worries. It's fine. I was just curious. But yeah, so basically there is, yeah, that's Depressla. We'll see. We just took a big swoop off 240. The other mega cap I want to address and take a look at, Tesla is a mess, Aaron. I love that. But yeah, so here, Meta is looking kind of like a head and shoulders to me. And correct me if I'm wrong, but you know, I see a shoulder, I see a head, I see what could be another shoulder. If we go down from this 230.
All right, test time.
Yeah.
All right.
I'm scared.
No, let me just adjust this so that people see this. No, go back to her chart. Yeah, here we go. That's way better, so people can see the top. All right, so if this materializes into head and shoulders, where, number one, is the neckline, where is the entry, and where is the stop?
So here's the neckline.
Beauty.
The entry is, it's at the top of this shoulder, right? No, it's at the neckline.
It's at the break of the neckline.
The break of the neckline.
You're waiting for a move back up.
Yeah.
So it'll have to go like this. It'll have to go up a skosh, right back down, and then you get it
Once
when
it breaks
there.
lower, then
right.
I go. And then
Where's the stop?
My stop is if we make a higher.
You mean a higher low? You mean the break of the head?
Yeah, sorry, that's
So
not,
the stop has to go up right above the head.
No, I appreciate.
right?
Thank you.
Yeah,
I appreciate
that's
that.
Wicked. No, because the more you practice, and I think it helps a lot of people
Yeah,
as well.
because I think
right?
head and shoulders I struggle with. I know a lot of people in the chat always asking what's going on with the head and shoulders. It is the 5-minute chart. Muy cansado. It's the 5-minute chart. Sorry if I said your name wrong. But yeah, so that is the 5-minute, and thank you. I appreciate that because yeah, head and shoulders is one I still definitely struggle with. But yeah, that makes sense because it would be a higher high, so that's why you put the stop
And
there.
what's the trend that precedes it?
Well, it's been an uptrend, so it's a reversal, so that makes sense.
Bang. Bang. Very nice. Very nice.
There we are. This is this is Meta. This is Tesla. Just some stocks I'm looking at. But like I said, right now, being patient, taking some time, decompress-laying, just waiting here for some trades.
Crapsock says, I thought the stop was above the shoulder. No, it is. Personally, I put it above the head, not above the shoulder. That's where you know for a fact you're wrong when it makes a high above the head. I'm talking about the head and shoulders, not above the shoulder. You want to take a tighter stop. What's going on with my camera? It just moved to the left, to the left, to the left.
Everything else.
I wasn't going to sing any more of that, but you did, which is cool. Unless you want to have a more of an aggressive stop, yeah, sure, you can use the right shoulder. I would put it at the head. I need to know about Bitcoin, says DaMapa718. All right, well, Bitcoin today is a little bit lower. It's down 0.9% all the while ETH is getting some love. Ethereum up 3 2/3% today. Ethereum has been far underperforming Bitcoin. It's all about Bitcoin lately. as it's been knocking at key levels. Again, on my chart, I'm looking at 48,000 and 52,000 as the next key levels for Bitcoin. We were knocking on the door of 45 yesterday. I believe we got to 44.5. What's up?
You see Ramin in the chat.
Ram? What is she doing? So sorry, kind sir. Your camera is back.
Sorry to interrupt you, I just saw that.
No, it's okay. Anytime Ram chirps, I'd like to know about it.
You're calling it a chirp.
All right, it's been a good look for Bitcoin. In case you're wondering why Bitcoin's been running lately, we have been talking about a spot ETF. And the benefit of that is the fact that all the fund managers who create the ETF are going to actually buy Bitcoin to hold in their personal portfolios as well, because now they have an ETF. So you have to buy what the ETF is. That's that. And in addition to that, we have the halving event in May. So that's about 6 months from now or so. And usually in the run up to the halving event, we have a nice move up in the instrument's name, Bitcoin's name. The third thing is obviously, there's speculation at this point that the Fed is done raising rates. We may not come down as early as some people would like. By that I mean start cutting, but it looks as if we're not going to get any more elevated than we are at the moment. Whether that happens or not, only time will tell. The speculation, money right now on the market is that we won't. And because of that, the more speculative assets, things that are considered speculative by the market, whether you think it's speculative or not, is irrelevant. It's what the market thinks in general, tend to run up when we have that move in interest rates, or that kind of future forecast of interest rates. Things start to run up. So the three great tailwinds right now for Bitcoin. I've never held Bitcoin. I've never held any sort of cryptocurrency. I can absolutely see its utility. I can also see the utility of smart contracts for Ether. So I like both. I think they're both very good. I love the blockchain. I love the direct person-to-person interactions. I love the fact that it can't be inflated and manipulated in the way that fiat currencies. I like all that stuff about it. But whether or not, it ends up being a thing, we'll have to see. But I have no issues with it, and I don't share Jamie Dimon's opinion yesterday that its only utility is for criminal organizations. I disagree with that wholeheartedly. And I personally, again, not disparaging the man, he's obviously very intelligent, but I think he's got some ulterior motives there for making a statement like that. Henry Chung. There was a slight volume uptick on Oxy, reached 55.84. Maybe Uncle Warren's trading viewer went off. Yeah. Well, we know Uncle Warren has been very interested in buying Occidental Petroleum below 60 bucks. Now, whether or not he's buying at this moment, let's have a look at Occidental, because look, oil's been very weak lately. Here's the daily look on Oxy. We're definitely at that very key support level from earlier. That 55 area been held up really well, essentially, since June of 2022. So going on a year and a half now, that 55 level has been absolutely, a key support level. This is an interesting swing trade. I don't know if I'd, just get in long on a swing simply because we are at 55, but the chart shows that, it's a key level. I'm not convinced on this chart. I'm not convinced, on this level, but it is something. It's some food for thought. Bless you, Neil. Yeah, it's been an interesting time here on Occidental as oil continues now below 70 bucks again. Bless you. It's at 69 1/3. I should mention though that there is a very important level on West Texas Intermediate contract. I'm going to go into the futures here. I'm going to go to the continuous contract because I want to show you what I'm talking about. This $66 level, again, I have $65, $66 level. I theorized earlier in the summer that this is where the Biden administration was adding to the strategic petroleum reserve that they were exhausting during the time when oil was very expensive to bring down gas prices. Look at every time here we dip into that 60, lower 60, mid 60 area, it's always bought up. Forget about the wicks. Look where the closing prints are. Okay? They're all above that $64 area, 65. So, if we get into this level, this is going to be really interesting to see whether or not we bounce off here again. The big kahunas were telling me yesterday that word came out that the Biden administration didn't want to actually add at these levels. Something to that effect, Neil, right? The strategic. They were complaining about something to do with the infrastructure, which we're not really convinced with here, for not adding at these levels. They'd rather wait, I guess, till it hits $90 again, and then use taxpayers' money efficiently. So, yeah. Interesting look on Occidental, interesting look on CL. Look, I'm not going to complain about oil prices at these levels. I'm not in the trade. All I know is I have a V8 and I want gas is cheap, baby. So yeah, that's all I can say about that. Yeah, I'm not self-interested at all, am I here? The Neil wants me to look at Affirm 39. So we're going to look at Affirm right now. And Affirm is rocketing up here on the day. Let's have a look here. We're still definitely within yesterday's range. We're below yesterday's range, I should say. But we are moving up quite nicely. Higher highs, higher lows here on the day. So nice upward channel on AFRM at the moment. Do we expect resistance at the lower end of this consolidation range? Look at this, how we ranged yesterday. This $39.75, $40 area seems to be an interesting area of resistance. Yesterday, it acted as a momentary area of support before that eventual move down. Look, this is a head and shoulders if I've ever seen it.
Oh my gosh.
Yeah,
that is
intraday head and shoulders, yeah, because it was preceded by a nice little run up there. But in any event, great look on Affirm on the day. I'm not sure what percentage it's up because the chart keeps malfunctioning here. Yeah, okay, it's 1 o'clock. So it is time to restart the lesson, guys. Yep, so let's bring that bad boy in case you're wondering what we are talking about today. We are talking about the 5 stages of trading psychology, okay? Not hard and fast, but we're trying to narrow it down. We can't call it the 100 stages of trading psychology, but the 5 stages of trading psychology. The first, unconscious incompetence. And we use the word incompetence, again, here, not as a pejorative term, not as a derogatory or, statement against anybody, but just to say that you don't know what you don't know, okay? Which is, to some people, it's a meaningless tautology, but whatever. We're going to go with it anyway.
If you don't know, now you know.
All right, this stage is one that we all go through, and here's how it happens. You take a copy of Forbes magazine, like Adair was saying. This is a little anecdote, but we're going to use it anyway. You take a copy of Forbes magazine. You go on an Instagram influencer's account, a trader influencer, and he's got, Ferraris, a house in the Hamptons, this, that, and the other, and you say to yourself, well, I want a piece of that. So then you open up a demo account, right? You go on to Thinkorswim, you go on to Interactive Brokers, you get yourself an account, you fund it, you put a couple of grand in there, whatever. It gives you access to data, and all of a sudden you've got a paper trading account. You take a couple of trades, you make money. All of a sudden you're dusting your shoulder off and you're like, I've got the skills, I'm ready to go, right? So you jump out of the demo, you jump out of the paper account, you go live, and you get slapped. You take a bunch of hits, and all of a sudden you lose some of your money. You have a big drawdown, 80%, 90%, 100%, whatever it is. You take a big hit. You take trades without doing the requisite analysis, without having the requisite trading system in place. This stage is similar to when, like, again, another anecdote, when you're buying a car, your first car, you're excited, you got a couple of bucks in your pocket, all of a sudden you're approved for financing, whatever, and you take on the car, find out later the insurance is through the roof, and the gas is very expensive and it's high maintenance. Something that you kind of regret that you didn't do, but now you're involved in it. We want to avoid this stage. Most traders, sadly, will end their trading career at this specific stage because they'll be like, this isn't for me. I took a big L, the market is rigged, and I want nothing to do with this. Some continue. And those ones move on to the next stage called conscious incompetence. This is a stage where you realize how little you know about the market. You realize that you need to put in more work. So now you're like, okay, I'm going to make this work for me. What do I need to do? So you go online, you go to YouTube, you watch a whole bunch of videos about trading. You want to see what the gurus have to say. You buy books, you buy ebooks, you get Trading in the Zone. You get technical analysis of the financial markets. And then you start experimenting with all the new tools, the indicators, whatever that you learned in the book, the different setups. This stage can last from a few months to years, depending on your specific aptitude and your risk appetite. Okay? In fact, 60% of traders who get to this particular stage are going to give up in the first 3 months. Only a handful of traders will make it on to the next stage, known as aha moment. Again, I want to use this because it's funny. Wow, you guys are awesome back there. The production team stays undefeated, literally.
I love all the sound effects.
Literally.
Like, you're going so hard with the sound effects this week, and they're all so fun.
Production team undefeated. Shout out to Ram Ram and the Chilean Nightmare back there who are killing it on the ones and twos. So the aha moment, what's this all about? This is the moment you realize that the problem is not the system itself, but that in the financial markets, you don't need all the tools that you've read about in the books, all the gurus telling you MACD, RSI, stochastics, this, that, and the other. You realize that you can still make money by using a simple moving average if used correctly. Neil, what are you laughing at? You're distracting me. What are they saying? Is it like expletive? Okay, well, tell me later. You actually realize that you can make money by using very minimalistic indicators such as simple moving average if used correctly. Okay? You also notice that the gurus who claim to know what the market's going to do from minute to minute and hour to hour don't actually know that nobody can actually predict what the market's going to do. This stage is when you start to understand making money from trading takes more than a system. And you learn one of the most important lessons, which is there are trades that will go your way and that others won't. And that losing money is part of the system. Even when you lose money, you realize that it's just a process and it's not the end of the world. So taking L's and maintaining your confidence, or taking L's and taking less L's, making more M's, as
Thank you so much.
my friend Adara loves to say.
Thank you so much.
Is part of the process. It is part and parcel of the system. And for those people, they move on to the next level, or the next stage, I should say, which is conscious competence. This is the stage where things are going really well for you. You start really, getting into your own here. At this stage, you make only trades when your system tells you. You become agnostic to what the market is doing. And once you get that signal for that A plus, B plus setup is the time that you actually pull the trigger. If your trading system tells you to enter a trade or not to enter a trade, you wait. At times, you can wait for hours before that signal is actually triggered. This is also the point where a great number of successful traders break out, so to speak. Though there are times when you take losses in this stage, you become consistent with your wins, and that's the most important. This stage lasts for about 6 months or so, and sadly, very few traders will actually reach this stage. And not because of a lack of competence, not because of maybe it has something to do with your finances, but it's really about persistence. You got to stay the course, okay? And you have to be learning from your mistakes. If you do, you move on to the last and final stage that we call unconscious competence. This is the stage which only a few patient traders, patient, and you could use other words in there, committed, dedicated, disciplined, thank you, Adara, reach, because it takes years before you can achieve this level of unconscious competence. I can't say that phrase. At this point, trading doesn't become boring, but it becomes mechanical. You see a setup and you know this is the right setup and you pull the trigger. And you do so without hesitation and without fear, no clammy hands, no churning of the gut, nothing like that, which is the way it should be. You've spent years looking at charts, so much so that you develop a clear understanding of what you like in your charts. What's so funny?
Oh, there's a comment in that I think that's what Ramin is laughing at.
What are they commenting?
It's why not from Why Not there. No,
I don't know.
I'm not upset.
Unconscious constipation. All right, I'm almost done, guys. Let me just finish this
I'm
last
so
little
sorry
part in here.
to interrupt you there.
Come on, man. That is good. That's good. The
Apologies,
chat
apologies.
is killing me. I love it. Entering and leaving trades will literally become second nature. You do it without getting that, churning feeling in your gut at this stage. While you will take losses, and most likely will be that you will always take losses, they'll always be smaller than fewer and far between than they were originally. And if you do that, you should be able to see the success that you get from being a regular or a consistently profitable trader. And that's what we all aspire to get to.
Yeah, I mean, I think it's a very valid point. Yeah, sorry, I got very distracted by
It's all good.
there.
Why not? It's
no,
killing me.
Yeah, I think you made a really good point.
Calm down there, Ram. We're trying to teach a lesson here, bro.
I mean, shout out to Ramin, because that's beautiful. Also, shout out to Bears versus Bulls earlier, because they commented Cam Ram, and I loved that. And I did not, because that was when the camera was, when Sharif was getting upset about the camera. But yeah, this is a beautiful time. I apologize for the distraction there, but yeah, I think really it's just important to be dedicated and to kind of, I think, helping acknowledge that these stages happen to people, at least for myself, made me feel a bit better, you know what I mean? Because you're not alone. You are, there are other people going through the same experiences with you. So I very much, shout out to Pauly D, someone opened the nitrous tank in the office. Yeah, we have fun, but we also make some trades, including I am in this Tesla long right now. Shout out to Greg Moore for the levels here. So right as you kind of type that in the chat, this whole level around VWAP, I was kind of charting this out, and I was like, if we break above the channel, I'll get in. We did. I got in at 240.70, which may be a bit high, but you know what? I'm getting out if we make a lower low. And when I mean like lower low, wherever like the next kind of lowest low is. I like where we're going though. I would rather we have a decisive break above 241. That would make me pleased as punch, pleased as Cybertruck. I do not know, but I would enjoy that a lot. It would be a great time. I want to take some of my out probably around this 240, 250. I might have a beak wetter because that was kind of where we noticed a little bit of movement to the downside initially. But yeah, I like this. I like Tesla right now, although I would like it better if we kind of continued flying to the upside. That would make me very happy. Here's Tesla. There was a question here. Nando's Art. I think it's because you finally realize how big you can lose, and so you take the losses quickly, and this gives you more chances to win. I love that. Because you're right, because I think the more kind of cognizant you are, and especially that's why I think that first stage, I love that the first stage is unconscious incompetence, because you don't really know what you're doing. And so how would you know you're doing badly? Do you know what I mean? You're just kind of trying to figure out who you are as a trader. You're maybe following, certain things you're seeing online. And the thing is too, a big part of trading is actually applying those strategies to you. And like I said, I think that's why I've been a bit off my game lately, is I've been doing less of these range trades. And I think I need to move more back into that, right? And I think this is also how today's lessons, looking at this, the psychology of trading in these 5 steps is really applicable to what we were also talking about yesterday. That's why I love that we have a whole week to go over these lessons, right? So yesterday we were talking about journaling, and I think a lot of like the reflection you do through journaling can really help when we think about, the psychological levels. I think you can actually notice your ascension through these psychological levels, your growth through these psychological levels if you're actually charting it out. You know what I mean? So I think like the whole journaling aspect is something I would like to get more interested in. Very curious. I think it'll be a very interesting time. But yeah, so and I appreciate everybody being really honest in the chat here as well, talking about their wins, their losses, their experiences. So yeah, I think, we're all community here. I'm really grateful to be a part of this community as, I paper trade and everything here, and I learn and grow. Also, Kiki Manga, Apple, strong head and shoulders. Let's take a look. What time frame was that for the head and shoulders? Yeah, okay, I think maybe it was the 5. I'm not seeing much here. I think that, I would, why am I on the 3 minute? I'm on the 3 minute. Let's switch to the 5. There we go. 1 minute apparently. Okay, let's check the 1 minute here on Apple. I kind of get what you're saying. I think here, I honestly don't know if the 1 minute, I think because it's a smaller time frame, the thing I would probably look at for, yeah, Louis Tortora saying check the 15 for confirmation. Yeah, I think like too, we talked about this a lot during chart pattern week, is if you see a pattern in certain aspects, it's kind of, you know, better to look for confirmation on other chart levels. I honestly am not, you know, it could be head and shoulders. I'm not really seeing enough kind of confidence or confirmation in this head and shoulders on Apple, especially because it was on the 1 minute here. Yeah, not super, yeah, 1 minute head and shoulders, not really seeing it right now. But I think, you know, if you're thinking, yeah, there's no neckline, native gamer, I agree. I think, yeah, I would say like, you know, look for confirmation on other levels. If you are thinking there's going to be a reversal, maybe look at what we're doing with certain indicators, take a look at different chart time levels, stuff like that. Also, Charlie Taff has a question directed at you here.
Yo, Charlie. Yo, big guns. My biggest issue is staying consciously aware that I'm not playing a game. Rather, this is my real money. Do you have any tips to remind yourself of this? Like, look, you know what I was saying earlier on about, it's my personal opinion that if you haven't been able to prove profitability in the sim, you have no business using real money. That's just my personal opinion, because I don't think it gets any easier once you put real money on the line. In fact, likely it gets harder because, like you said, this is real money. And there's something real to be lost here. It's not just the sim that I can turn off. I'm like, all right, well, I lost some fake money. So what I would say to you is be patient. Obviously, if you're relying on this as your main source of income, that's going to be an issue. Because if you're, you know, if you're trading in the sim for a couple of years or a year, whatever it is, whatever it's going to be for you to be profitable, you got to have something else on the side that's putting food on the table and paying the bills. So that's just my opinion. Once you get that profitability or that consistently profitable system, you know, go into the sim, start taking an adequate amount of size. It's nothing that's, you know, it should be based upon obviously your account size, right? We talked about this in the first week about when we talked about managing risk, the 1% rule, what have you. No one trade should be more than 1% of your overall account. That's one way to look at it. You can do other things as well, where you just take if you're trading like big caps exclusively, you take a certain specific size, and you always live off that size, 10 shares, 20 shares of Apple, whatever it's going to be. But my suggestion to you is prove profitability before using real money. And once you've got that proof under your belt, you size in gradually. And then, you know, obviously that requires you to have a side gig, side income, rich mommy and daddy, whatever it's going to be, right? That's just my suggestion to you. The Piper. Tech analysis. Murphy is on the net as a free PDF. Yeah, sure. Pardon me.
Bless you.
Yeah, I'm assuming you're talking about John J. Murphy's technical analysis of the financial markets. I didn't actually know that it was available for free. I think I did actually, because I Googled it and then it came up. I think it's on Google Books. So if it is, fantastic. I mean, I'm not going to tell you obviously to get anything copyrighted, but if it's on there, guys, okay? Moving down. El Sun Music, say that again. The Katina Man is covering more Apple. He's short at 195 and right at that level, high 194.90s in that level, and he's been looking for the 195 rejection like it's been doing all morning. So anybody following along with the Katina Man's trades, he just covered some more Apple. El Sun Music. Trader TV has a great amount of educational videos, very helpful to new traders. Why do we have to be doing educational during live trading hours? See what happens on... Look, because a lot of people, they don't go into those, right? And we want our viewers to have longevity, to stay the course. And part of that is making sure that they have a fundamental understanding of what is involved in trading. If you guys, you know, take big hits and blow up your accounts, you're unlikely to come back as a viewer. So we want longevity, and we want, you know, for you guys to stick around. So we've decided to get this educational stuff put in, you know, and we are going to have likely very soon a second stream. The second stream will have Sean and Neil's trades live while Adira and I are doing the educational stuff. It'll be like an information only channel where you're going to be able to see all their entries and stuff. So you'll be able to run both channels at the same time and see what Sean and Neil are up to. That is coming soon. I promise you, just be patient. I've seen it myself. I've seen the layout myself. It's being done right now. Okay? So just hang in there. Pranaya, I disagree. While simulator is helpful, emotions are drastically different with real money. Perhaps start with small size that you can afford to lose and slowly scale up. What makes you think that you are going to be profitable with real money if you can't be profitable in the sim? Explain that to me. What is going to change about your system when you use real money that's different than when you're in the sim? If you can't prove profitability in the sim, and I'm going to say it, you can absolutely disagree with me, and I respect your opinion, and you're entitled to it. But I completely don't see what is going to make things better. How is your system changing when you use real money? Moving down. Reliable Rudy. In my opinion, to that would be trade fundamentally sound companies, solid balance sheets, less volatility. Hey, yeah, absolutely. You know, some people, they just love large caps, right? They like this, I don't want to say safeness because nothing's really safe, but the more predictability, I guess, with large caps. You know, you get a good catalyst like AMD today. They released the MI 300 chip, and AMD runs up 8 1/3%. So there was some predictability there. Whereas if a small cap gapper shows up, it's up 100%, and then it gives up the whole move by the end of the day. So I see what you're saying, Reliable. Shout out to you. Moving down on some other questions here. Let's see what we've got over here. Rusty Shackles, like that name. Hey guys, I hope all is well. What is the difference between SMA and EMA? We did talk about this when we did our week on moving average. The simple moving average doesn't weight the days differently. So if you're using the 200 moving average, day 1 is weighted as equally as day 200. It does not have a bias to the more recent price action, whereas the exponential moving average more heavily weights the more recent price action than the more historical one. And personally, I feel it's better for day trading, intraday trading, whereas maybe the SMA would be more appropriate for long-term investing. Just a thought. Moving down. Over here, D-Loaf. So you're saying I can watch Sean Katina eat his lunch on, no, you're not going to be able to see anybody on the other screen. It's going to be an information only. But yeah, there he is. Look at him.
There you go. There he
He's cooking up a storm.
I love that.
You must have burned your eyebrows in that little explosion that happened there.
Yeah, I was gonna say. I feel like it'd be like a little bit scarring there.
Right.
I still have my fruit salad.
I love the Sean lunch updates.
I love the fruit salad.
Oh yeah. Oh, you're
It's like
still.
a nice tapestry.
That's very
there.
nice.
Different colors.
I like your shirts, you guys.
A little bit. Her inside shirt looks very similar to mine. We didn't plan this, by the way.
We do not plan this.
I like it. The Katina man is always live on fire, baby. Whether midday, morning, he's always here, baby. Ivan, let's see what Ivan's got. Sim is not real money. No matter how profitable you are on the sim, once real money on the line, people can't control it as sim. You're bang on. But what I'm trying to say is prove that your system works. It's not going to get easier when you go into real money. No question, agree with you, because then you're going to have the psychology part of it as well, the losing of the real money. So I absolutely agree, but you need to prove that your system works. Why use real money to find out your system doesn't work? Moving down. What do we got here? Reliable. The scenario regarding sim, since you're trading fake money, you might be willing to attempt trading below average setups, where with real money, you might narrow down better setups. The whole point is to be able to adopt the system that you've developed on sim and know that works and try to use that in real money. Now, that doesn't have to be, you know, if you're trading 100 shares on sim, and you don't have to trade 100 shares with real money once you go live. You can incrementally move up, but the point is to make it systematic so that you know, number one, the system works, and number two, it becomes like instinctual. It's like, okay, here's a setup that I was looking for, and this is what I have to get into now. Moving down. So great feedback, by the way, guys. And I love this back and forth because everybody really has different opinions. And that's how we really, you know, the exchange of ideas is really how we develop. So just because I have one opinion doesn't mean that yours is any less valid. And please bring it to the fore and I will absolutely shout you out.
Yeah, absolutely.
Elon, also Sharif, we should focus on the trade setup as money will come along if you have strong hand-in skills. Agree 100%. Agree. Reliable. But I agree if you can't turn a profit on a sim, you shouldn't trade real money. Agree. Moving down, Rusty Shackles, thank you kindly. Blackberry says real money feels different. I think it's the psychology that is different on a sim. At least that is my experience. And a real account has costs. Absolutely. But that really doesn't change anything about the actual structure of the trading. Right? And you're trying to perfect the structure. Right now, you're kind of trying to figure out, well, how do I make money? What kind of system do I need to employ to extract money from the market? You haven't included the psychological component yet. That'll come with real money, right? And so when you're in the sim, you are trying to iron out the technical side, not the psychological side. You're going to have another hurdle to get through once you go live. Moving down. Sorry, I'm just trying to see the ones that tagged me, guys.
Yeah, interesting conversations about sim. Just a lot of interesting stuff about sim here.
Go for it.
I will say, someone who's like in the sim, I find it to be really helpful because, like, honestly, today, 100% honest, no winning trades today. And I think part of that too is because I'm in the sim. Like I've tried different strategies as I've begun trading as I've been trading. And I think, like, trying different strategies is helpful and it's something you can kind of only do in sim. That being said, I still like to have parameters for myself. I still like to have discipline parameters for myself. And I still like to hold myself accountable. Do you know what I mean? That's kind of, so basically what I'm doing is, even though I am in sim and I recognize it's a very different situation, I still like to hold myself to the same kind of level that I hopefully would should I, be trading live, right? So that's kind of my take on that here. That's my look for my sim experience personally. And I think too, like, the more practice I have trying to take non-scalps, the more I'm realizing maybe I am just a scalpier kind of person, right? And I think that's something that you're kind of able to try more strategies and get a sense of there when you take, when you kind of, practice, have other experiences. Abel Gomez, I think your success is based off your preparation. Real traders stay late. Shout out to Sean there for real traders stay late there. Market recap. But yeah, no, I think it's a solid point. And I think preparing is, really important. And I really appreciate you saying that here, Abel, in the chat. But yeah, I think that's a really good point too as well with regards to the psychology. Is that, I think part of psychology is, if you stay ready, you don't have to get ready. If you're prepared,
I love that
you're good to go, right?
Stay ready so I don't have to get ready, baby. I love that.
Right, so
A friend that said that all the time.
Right, good times, exciting times. Also, I'm just, random shout out, I'm looking at Disney here. Disney looks flat bottom breakish.
Uh-oh.
Does it not?
Yeah, descending wedge.
Right at VWAP. Oh, what did I do here?
Oh, that's cool.
Yeah. So there we go. I may.
That VWAP, that's actually a real good look there,
Yeah,
Dara.
I'm actually short.
Yeah, well, that's a good
so there
look.
we go. That is that kind of the take here on Disney and my thoughts on being in the sim. And gotta learn.
Some other great comments coming in there. The Boring Man. The Boring Man is single-handedly responsible for Neil eating pineapple pizza yesterday because it was his comment on YouTube that alerted me to the fact that the Neil was adamant that I was going to speak about Lee Otto on the pod, which I didn't. And that necessitated him consuming pineapple pizza live on air yesterday, which he did not like. He goes on to say, how to overcome the urge of trading more when you have closed your positions and want to protect your capital profit after a good or bad day. How to overcome the urge. Oh, so you mean like over trading? Yeah, that's a very good question. And I don't know if I have the answer to that right offhand, other than to say, it's going to really come with practice. It also really has to do with like your level of contentment. If you're happy with where you are and the progression that you're making, you're less likely to overtrade. But if you're, again, that's the whole fear greed thing that we talked about. What day was that? Tuesday? Tuesday.
It was
Tuesday.
Yeah. Fear and greed in Las Vegas.
Yeah, the greed may have an issue with that. You're profitable on the day, but it's just not enough for you. So yeah, that's something that you're going to have to practice on. Go back to Tuesday's stream and check out what Adair and I were saying about fear and greed. I think that'll help if you weren't there already.
That was a good discussion, I think.
It was, right? Simple pro trader. I like this comment. You need to prove yourself you are consistent and not just lucky on a few trades, regardless of your account size. Start small account and try to grow it. Agree. Sounds like wise words there. Beatrice Rumford. If you bang out your starts enough in the sim, then you're less likely to have extreme psychological swings during live trading. I don't know if I necessarily agree with that. I think that, you know, even if you're profitable in the sim, using real money, it seems to change things, guys. It does, right? So even if your system is sound and you know that it's sound based on your data analytics about your trade in the sim, I think that you know, that variable, that unquantifiable variable of the psychological component of it, you know, it may throw you a couple of curveballs, but you won't know unless you try. So obviously start small when you do switch to live. Daryl Finch, when I started, I did 3 months on the sim and I thought I was ready. Lost and I went back to the sim for another 3 months. Look at me now, almost 9 years of day trading. Gotta test your day trading strategies, my man. I couldn't agree more with you on that, Daryl.
Avalanche of bang buttons for that one.
I couldn't agree more with you, Daryl, on that. I think that you're a wise individual and quite enlightened. Patrick Langlois, time to pinch the bills. Okay. Oh, I see. Okay, I see what you're saying about that. Eddie Leung, people use the sim like a gambling casino. No system, idiot trade sizes. Based on intuition, this is not the meaning of using sim. Couldn't agree more. That's
all,
All right.
folks.
Go for it,
No,
Katina,
I
man.
just wanted to come in because I just thought, we're talking about sim mode, and the thing is like, you know, you guys see the prop floor behind us here, empty now, they're all talking, they're all in a class. The thing is like, the mental when you're in sim mode is just so different, right? We talk all the time. So I mean, I'll probably be disagreeing with half the people here. I don't know, but it's like the minute, and I'm just talking about this for myself as well. Like when you look at all the traders behind us, if we get 10 traders that walk in this door and 2 ever make their graduation of a small little $100 a day is all they need to make, and that compounds over time, you still can't even get anybody to graduate. And the problem is that they make money in sim mode, and then when they go live, a lot of the time, they're unable to adjust properly to the real life kind of risk that they have on. And I just feel like even when you guys are paper trading, even in long-term accounts, you know, I can sit here and say, oh man, I wish I got long something. But until you actually put money into the trade, it's completely different. So let me talk about this now for myself, and because I graduated in the first month. I was very, very lucky. I was hired with 20 people. Only 2 people ever graduated out of that 20. So again, probably pretty much on pace with what happens. Even myself, when I trade Apple, like I just shorted Apple up here 500 shares at 195. It's not even like that huge of a position, but for some people, and I just hear Sharif go, oh, like that, like that's probably a lot of shares, right? And for some people, it will be. But my mental for that would be way different than if I shorted 5,000 shares. It's not supposed to, like I understand that, like when we're sitting here talking about these things, it's not supposed to affect you mentally, because that's why people say turn off your P&L and do things like that. That will work for some people, you know, but for me, learning is, and that's why I say for fun today, like we just added Apple, now we're gonna go 6 for 6 today. But again, it's like you could only go 1 for 6 if that one trade, you had 5,000 shares for $1. You know, it's like, if you have that, that's great. But it's about trying to trade, and I'm talking about 22 years experience here, trying to trade the same way, regardless of the share size that you have, is always going to be a problem. It doesn't matter the size, doesn't matter the time of day, it doesn't matter anything. That's the mental that you're gonna have to get behind. It's how can I trade the same relatively regardless what share size I have, right? Like if I have 5,000 shares and it goes down 10 pennies, that's $500. That's the same as 500 shares, $1. You know, so sometimes having your P&L up, like, oh my God, I'm in the money, $500, and then you take it, and then it drops down, and you're like, why didn't I hold it? It's because I'm staring at my damn P&L. You know, so I feel like we all battle these issues over and over and over again every single day, and that's just part of trading, and that's why someone said there, why are we talking about this while the markets are open? I mean, look at my position right here on Apple. We got once and twice, and we reloaded it, and now we've done well to hold it. I mean, I was not at my desk this whole time, but we've done well now to hold it all the way back in. But look at these scalps as we take some out. 10 cents, 15 cents, then here's the hold. So it's taking me a long time to be able to do this. You're not going to go 6 for 6 just screwing around. So I'm learning patience, and now my next thing is trying to learn share size. So I always feel like that's something important to talk about, and I'm glad to have, quite frankly, interrupted your show. Thank you for letting me do that.
His experience, I think that is very valuable.
You have any questions for me, Sharif or Adara?
Do I have any questions for you? I can ask you anytime I want.
I know, but for the people, my man, for the people.
Yeah, no, I have a question. Thank you so much for quite literally popping in here. I love it.
100%.
I guess, how do you find that your strategy is like adapted? Like, do you think that you end up trading more closer to your personality, or do you kind of adapt your personality more to fit like specific strategies?
Nice question.
If that makes sense.
Yeah.
It's kind of a weird question, but.
No, it's not a weird question. I actually don't really. I'm trying not to throw things in the way of the stuff you guys are talking about, but.
Yeah.
Be honest,
Sharif,
man. I mean,
no, but I don't.
Be honest.
I was going to say my personality is not really. I would say I'm very conservative, like in nature. Like I don't like to take too many risks. Like my portfolio, my long-term portfolio is like 35 names. Like it's all diversified. I don't put like all my eggs into one basket. You know, the only decision that I made that I stick to my whole life is my wife. So the thing is that as we go on here, you said it already, Sharif, like a lot of the emotion that we show on the show is because I believe that you guys as viewers, you want to see how we make in trades, but then also a little bit of our personalities. So
Sure.
I feel like I do have a little bit of an entertainer sort of
100%.
in me a little bit. I think that you guys would agree with that. And so I don't really try to let my real personality, because I am very relaxed and calm down. Like you just already said that, Sharif. Like I don't sit here and be like, wow. Like I say, wow, that's a great trade. But at the same time, it's more calm as opposed to what we are on the show. But to answer your question more specifically, Adara, I just think that honestly, it's about the preparation and knowing. You asked the question about like, what do you trade?
There you
Technology, healthcare. We had the thing before. I just try to look at the same names all the time and try to keep a level head about it. Like I just went and talked to Brent. I was like, can you believe Google, even Neil, like we're up 9% on AMD and on Google and things like that. Like that's a little outside of what I thought was going to happen. So my conservative nature, we take out $3 winners instead of holding for $5 or $6 winners. Yeah. You know, so I feel like you do have to trade who you are. And if you're into risk and you like those things, then I think like a GameStop and things like that is great for you. I'm more conservative in nature, where you're going to see the last couple of days I went 0 for 2 on GameStop. So what did I do today? No GameStop. You know, and I know that I don't trade earnings very well, so I don't really trade earnings. So for me, it's more about looking at your past successes and matching that with your P&L basically, and saying this is the style that I like, and then adapting my personality into the trading style. You know, because when I first started, and this game for me, it doesn't exist anymore, the sort of the spread making, I don't have that in me anymore because I don't like holding something 20 or 30,000 shares against me. Like, I now feel nervous about that. I used to take, honestly, man, like one time I lost at the close, I think it was either $17,000 or $22,000 doing the market on closing trade strategy. And I remember literally having like heart palpitations, sitting here, oh my God, I have 20,000 shares of Enbridge. Please, God, let this print the bid. For me, like I lose too much sleep. I lose too much hair, as you can see, by thinking about things like that. So I've chosen trades where I feel like I have more control over that. So for some people, that style fits them, and it's great. For me, I tend to get away from that, and I feel that goes with your personality. So great question.
Thank
Man,
you
you're
so
getting a
much for
lot of
answering
love.
that. I really appreciate it.
A lot of
Getting a lot
love
of
from
love
the
in the
chat
chat?
there, man.
Okay, I
People are
haven't-
really appreciating this kind of behind the scenes.
Where is the future ghost of Sean? I'll be here all the time. The future me is my kid. I mean, honestly, my son's already been on here. He's already made trades, and he's a YouTube guy himself. So we'll see what happens there. And my son Baxter is actually, I just found out right now, he's coming into town from Waterloo. He's at the
Hey.
University of Waterloo. He has an event tonight at Cactus Club by which he is pushing some of his businesses that he's already developing. You know, he's definitely taking sort of the lead on that as well. So
Shout out to Baxter.
yeah, shout out to that as well. Well, he asked me for money. He just sent a message. He doesn't have a suit, so I just wired the kid $5. So I got a come on Apple tank. Yeah, so yeah, I should be able to get a better one for him. But anyways, what else?
Why would you wear a suit?
He's at some sort of a meeting. It's something like that. I told him the same thing.
Cactus Club can be kind of
Please,
fancy.
more talk about this. Please tell us more. What else you want to know, Aaron and Joanna Brewster?
I love that.
There was a question in the chat.
Can they hear Neil? All right, Neil's gonna mic up, guys. Give him 1 second there.
Are these questions for me, or are you going to take a question?
Someone
Oh my God, did you see Sean's head on Neil's body?
I wasn't going to interrupt, but there was a question. Hospitals, can you guys?
I don't think she's like, okay, so we'll just cover for a sec while Neil adjusts his mic. He's putting on his normal mic there. The Day Trade the World mic gives Ram some problems back
I don't
there.
think they like the sound.
Yeah, but yeah, what I feel Sean absolutely hit it on the nose there, man. Giving you an idea and insight into what really goes on behind the scenes, how he really feels, how he really developed his personality or his trading strategy over time. Taking, like he was talking about, the market on close orders, which is one of the proprietary trades they teach us here on the floor. That wasn't his modus operandi. He's a different type of trader, and so working to his strength working to his strength was his best thing. Neil's ready.
Okay, so the question was, because this was back when there was a discussion about sort of like, you know, daily loss limits, and I think someone had asked about like setting goals, and the question was, you know, how do you find setting goals is important or whatnot? And I simply commented that your daily loss limit is more important than any goal you might set in terms of whether you hit your goals and all that kind of good stuff. Like that is way more important. Like how much you lose on a losing day. And on this floor, I've been trading for 20 years, and I will tell you this right now. The overwhelming best experience that I have learned does not come from my 20 years of trading. That's nonsensical because I've been able to look at as a risk manager at other traders for 20 years. So I've seen hundreds and hundreds. I don't know, maybe it's thousands. I guess we're old, Sean. It might actually be. I have no idea if it's that many, but it could be. And I've seen what makes people fail. The single number one reason why people fail in day trading that I have observed is putting capital towards things that don't work for them. So when that discussion happened about sim mode or not, and Sharif was saying you've got to develop something that works, that is step one. Step one is finding something that works for you. Then you go into live and start working on executing it. But you've got to find something that works in the first place. And then from there, do not lose more than what is a good day for you. If you can't make $500 in a day, you're not getting points for being able to risk $1,000. I'm sorry. It doesn't work that way. And unfortunately, I know it's not a fun thing to say, but it's just true. I see far too many traders that what'll happen is you take a 5-day week, and I'm just gonna make up some numbers to make this point for you guys. In a 5-day trading week, let's just say they make $1,000 one day, and they can make $1,000 in a second day, so 2 positive days, and then they lose $3,000 on a negative day or something along those lines, or even lose $2,000 on a negative day, and then come back on the 3rd day and make $1,000. So let's call it 2,000. So now they've made 1,000 out of 5 days because they have 3 positive days, and obviously you have a couple of negative. Let's give them a flat day as a 4th day. 3 positive, 1 flat, 1 loser for 2,000, but your winning days are 1,000. You're up 1,000 over a 5-day period, and you've made $200 a day. Ask any trader what they feel like when they come in that next week, when they have 3 1,000-day winning days, 1 losing day, and a flat day. They feel like a $1,000 a day trader, but they've made $200 a day. And the sad reality is, if they go into a streak of losing and scale up, they're gonna get themselves in a world of hurt. Now, first, what that trader needs to do is find a way to not lose more on that losing day than the winning day. It's that $2,000 that's hurting. They can make money. That trader makes money 3 days out of 5 with a flat day. They make money, but you cannot lose that much. If you can find a way to lose less than your winning days, then you can scale up. Do not scale up until you can do that. That has ruined almost every single trader that had potential that I've ever seen. Almost all of them. And then the next thing, of course, is going to be averaging down into losing trades. And to Sean's point, like, there was a time when those close trades were fantastic. And I was in that same trade. I think we lost. I think Sean and I were the 2 worst traders that day. It was painful, but you had to move on to something else. But if there's one thing that I can stress, it is that what does a losing day look like to you? And if it exceeds what you're able to win on a given day, just look at your month. That's all that ends up mattering for most traders. You know, that's when people talk about consistency, be consistent in your ratio, 100%. Not of how many wins to losses, but in the size of the wins to those losses. Because if you can't have a few bad trades in a row and still have a flat day, then that's a problem. I am going to be closer to flat than anything. And I'll probably have 7 or 8 losing stocks to 2 winners. But the ratio works out for me. So on a bad day, I'm close to flat, and it's always been like that for me. And it's just everyone's going to be different. But I've seen far too many traders that it's like some force of pride or something that they can lose a bunch of money because they're risking a lot. And that puts you behind the 8 ball. You get yourself into trouble too much. Just worry about that level of consistency first. And finally, I'm not going to go to my chart, but I have been in the slowest breakdown in Nikola that I've ever seen. I'm exaggerating here, but this has taken a half an hour to break 79, and I've been short 79 in Nikola this entire time, waiting for this to finally roll over the cliff. It's starting to go down now, but remember we talked about Nikola at the 80-cent level? Since it broke 80, it's SSR, and you can't hit the bid. So I've been offering all the way to 79. I finally got filled, and now it's starting to head down. This has taken a half an hour. It takes some patience, but let's get back to to you guys. We only have 15 minutes to go, and I'm kind of hungry again. I'm gonna eat something.
Well, that was like, I think, one of the better segments.
That was fantastic. Yeah. I think the people in the chat seem to have gotten a lot from it. I got a lot out of it. Thank you so much, Sean, for answering my question. Thank you, Neil, for jumping in here. And thank you, Zach Abramson, for one of my favorite comments. Fantastic for.
She loves that kind of stuff. That was one of the more realer segments I think we've had, at least since I've been associated with the show. Thank you very much to Sean and Neil for that. Dropping some hot lines and some wisdom, despite the fact that Neil, yes, was wearing those Rick James glasses. That doesn't matter.
Bears versus Bulls saying somebody get him an apple fritter stat.
The man had to eat pineapple on pizza yesterday. The least we could do is get this man an apple fritter. I might do that.
He got one yesterday, I thought. I thought Sean went to...
Did he?
And then he
had to wash down the pineapple pizza with an apple fritter. That makes absolute sense.
But I really appreciated the ability to have people, Sean and Neil, drop wisdom that I feel like I can learn from. You know what I mean with regards to personality? I think, because that was a question I had. I saw something to that effect in the chat. And so I appreciate Sean. I feel like I got a lot out of that answer. And I hope I think other people did as well and appreciated, the knowledge and the trading experience.
Absolutely. No question about it, guys. All right. We have talked about the lessons already. That's why we've taken the board off. So anything that you guys want to talk about, you want us to look at any stocks, you want to talk about anything that the big kahunas had to say, put it in the chat. We'll get right to it. Otherwise, I'm going to start talking about the Premier League. So it's up to you guys.
It's a threat.
Yeah, it is. Or I'll talk about football too. I'll talk about both if I have to. Put your questions in the chat, guys. Anything you want to know, any tickers you're looking at, you want to know about swing trades, day trades, what have you. Adira and I would love to get that for you. Good account size to get started, asks Saskatchewan. I don't think that there's any real good account size. It looks like you're Canadian, hence the Saskatchewan name. We don't have a pattern day trade rule in this country. So if you want to get started, obviously, with some brokerages like IBKR. I think the minimum you have to deposit is about $2,500 in order to get data access. In addition to that, you get margin leverage. I believe it's 3 times. So you're looking at, 7,500 bucks there of buying power with a $2,500 deposit. The leverage is not the same for all stocks. It really depends on the beta. So you'll have to look, when you look at the stock ticker, somewhere in the details, it'll tell you how much leverage is required. That's assuming you want to use leverage. I don't have a specific amount. Obviously, in the States, it's different. If you want to trade every day, you got to have at least 25 grand there. Mr. Long Shorts, do you trade RTY flat top? I always keep my eye on RTY, baby. I keep my eye on it all the time because it is important. Let's pull it up over here, RTY, which is the Russell Futures. Let's go to the Future December contract. Let's bring it in. So this is a very good look. Good for you for identifying this. What do we see here, Adara?
We see RTY, yeah, so we see...
I'm talking about this price action
this
over here.
area. Okay, so
what do you see?
Lower highs and a flat top, or higher lows and a flat top.
Bang.
Yeah, I always word it wrong the first time.
Yeah, you're
lower
accurate.
High, flat top. This is a nice flat top. We had quite a few touches here too.
Yeah, if you want to even
Oh,
make
so,
it
yeah, I
like
feel like I
this,
see
so
it
it
better.
doesn't have
Yeah.
to be as aggressive an angle. And then there you go. Give or take, look where the closing prints are. They're all south of this particular level. Now, we've got this level earmarked. Now we want to go see if this level is important on any other wider time frame.
Yeah.
So let's go to the 30.
Time frame confirmation. This
There
is
you
something I was
go.
talking about earlier too with regards
Bang.
to the head and shoulders that I feel like has been really helpful for me to learn.
Not offhand, it doesn't look like it is a very important level. We did dance with it somewhat back on the 1st and the 4th of December, but we've been kind of, it looks like it's like the mean area for the recent price action, which has been quite consolidative on the Russell since December 1st after, it had its big boy move there from that sub 1800 level. Now we're well over 1800, in fact, knocking the door of 19. We almost broke through 19 yesterday. So that is a nice assessment there by you, Mr. Long Shorts.
Yeah.
Good analysis of the higher lows and the obvious flat top resistance there on the RTY, which is
Looking pretty clear.
it is. Guys, the RTY is the Russell 2000 futures contract. If you don't have access to the futures, you can trade a similar instrument by the name of IWM, which is the ETF for the Russell, okay? Y Brothers, Tesla chart, please. You want to have a look at
Yeah, for sure.
Tesla?
First, I would love to read Hampton
for it.
Traders' $10 super chat. Thank you so much for the super chat. Sharif, buy apple fritter for Neil and a coffee for Sean. This show is for real. You are for real, Hampton's Trader. Thank you very much for the super chat.
I'm going to get Brendo to expense it.
But yeah, so I will show Tesla for now. Pranaya asked me what my rationale was behind the Google short at 136.9. The VWAP break, honestly.
Yep.
We're still kind of dancing around that point. That was my rationale for that short. I have no issue with it. I should have planned my out a bit better. I think where we kind of started breaking, probably like, I'll give it like 40, I would say like 137.29 was kind of my plan for a stop. But yeah, honestly, I will probably leave, like I don't trade after the midday usually anyway. But I'll analyze Tesla first. Okay, so Tesla has had a variety of moods today. She's been in her Taylor Swift eras. So first she was in an upward channel, then she had some lower highs. And I initially thought, maybe we were gonna see the continuation of this channel, but no, we broke that upward channel around 11:25. We went to the downside, downward channel here. Then we started doing kind of weird things. So we had sort of almost a double bottom, a little bit lower, and then now we're kind of seeing what looks like a double top. I would say Tesla has gone from an upward channel to a downward channel to a flat channel. What a time. But yeah, I think honestly, for Tesla to kind of be interesting at this point, we need to either break above here, above this 241.30, which honestly it looks like it could do. I think we need to wait to see for a break of the channel here. But flat channel rationale that we learned during Patterns Week would tell us that because usually flat channels, they can be either continuations or reversals, but they're usually continuations. We're up on the day, so Tesla could break to the high side here. Also, yeah, someone asking me, Adara, why are you short the strongest stock? Yeah, so I shorted Google because I waited for a while. I had my eye on this Google short the second we kind of saw this continuous failure of that 138.50. I waited, I was patient. I got short because we kind of dipped around below VWAP here, and we had how many candles to the downside. I understand that it may be not like the popular decision, but I think my technical standpoints, at least for myself, I can justify it. I stand by it, and honestly, we haven't really strayed from my point of entry too much, although now we're kind of going to the upside, so that's why I got involved in that trade. Though I do understand, just on the pure basis of the fact that it is the strongest stock on the day, seems like a weird choice, but I did it for reasons. There we go.
All right.
Also, yeah, Tesla looks good if we break above that channel.
All right. Let's see what some questions here. Shinobi was asking you about Tesla, but you already asking me, but you already covered Tesla. Cool says Sharif, is O a good dividend play at this price for long term? Realty, I don't even know what this. I've never looked at this before. Let's have a look. Ram chart. All right, here we go. Oh, let's see here. Number one, I don't know anything about the fundamentals of this company. I just want to make that very clear offhand. Now, with respect to the chart, I didn't even know that they were income paying. Let's have a look. It's a downward trend. It's a downward channel. We've clearly double topped or triple topped almost at $75 back in August of 2022. Since that time, it's been lower highs and lower lows. So from a technical perspective, stop, I'm trying to concentrate. Yeah, I know, folks. The Katina man is talking about donkey chains. He expects me not to laugh. Like, come on. Right? What I see here is obviously a downward channel with lower highs and lower lows. I don't know anything about the technicals with respect to this. I don't know anything about its income paying, how much leverage they have, what kind of debt they have, what kind of coupon they're paying out. I don't have any information, so I'm not gonna make any comment about that. But the technicals don't look that great. We're at like 3-year lows. We just touched 3-year lows here at 45 bucks, finding a nice little bounce back up into the upper end of the channel over here, but in the mid 50s we go. Sorry, I can't give you more than that. Cool. Reliable Rudy, ARDX swing has been printing. Let's see what ARDX has been doing. He's in that ARDX swing. He says it's been printing, still around 50% of the position. What are some levels you'd be looking for either extensions or reloads? Well, I'd like a reload at $5, definitely. Look at how it rejected off 5 back in April of this year. We had very clear rejections. I don't care that we wicked up into 520. The closing prints were south of 5. That happened again here in September, mid and late September. And then we broke through it. So if we get back to 5, watch to see what it's doing at 5, and then I'd reload at 5. Now, with respect to taking profits, I'm gonna have to go to the weekly here. Okay, so nice little gap fill that we're doing ever since this big boy Huadunk in July of 2021. Definitely be looking to take some profits. Well, we're definitely at a nice resistance level here because look, we had a consolidative area from October 2019 essentially to, November of 2020, the low area was $5. So we filled that gap. Now, to get above that, I'm looking at this area over here around $8. $8 would be a fantastic profit taker. Shout out to you, Reliable. Good trade there and good charting as well. Rusty Shackles. I like that name. When will you guys start discussing or teaching about scanners? Very soon, my friend. Scanners are an excellent way to find out what small cap gappers and others are moving on the day. I don't necessarily use them for the big cap and mega cap stocks. Instead, I use a watch list. We'll be talking about that. We'll be talking about what to put on your watch list in terms of data, what to put on with respect to filters for your scanners, at least what I use personally. We'll be getting to that soon. I don't have a date, but very, very soon. Moving. ETA, right?
Or I guess TBA is the one I'm looking for.
Right. Ivan says IBA.
TBD. Thank you.
To be determined.
Yeah, to be determined and then to be announced.
Yeah, there you go. Ivan, IBKR Canada 3.3, IBKR US 4 times leverage. Thanks. I had no idea that they gave 4 times leverage in the States. That wouldn't surprise me. 420 Bud Monster. Education inspiration. Yes, the eggs are fast and furious around here, baby. Is there Think and Swimmer in Canada? Yes. You have to have at minimum $25,000 with TD Bank, which is Toronto Dominion Bank for all American people that think it's American. It's not. It's Canadian. You got to have minimum 25K for Think or Swim with TD. Yeah. Yeah. You guys know where the Bank of Montreal from, and Canadians can't answer the chat. Okay. I should have said BMO. No, Sean. It's all good. Yeah, the Katina man there.
It's a Thursday.
B Leach, extending no shave November to December, beard incoming. Dude, I shave once a week. Give me a break.
Sean's got an idea. Going
No.
long on the beard.
Going short on the beard. It's just, yeah, no. Okay, have you seen what James Harden looks like without a beard? There was an AI picture of him that generated. I know he did. Yeah, it's hilarious. I hope I don't look as, yeah. Oleg, Sharif. That Etsy will cover gap to 100 US dollars, planning to take 17% profit, balancing now versus wait. Okay, great look. Oleg, let's have a look at what Etsy's doing. ETSY. ETSY. Here's Etsy. So, question was, can we fill the gap to 100? What makes you think there's a gap to 100? Why do you feel there's a gap here? I just see a downward channel, my friend. I see a downward channel where I see consistently lower highs and I see consistently lower lows on Etsy. Now, I know it had an upgrade. It had an upgrade the other day, right? You do upgrades and
Yeah, I
downgrades,
believe
right?
it did.
It's fine. You don't need to look that up. But yeah.
Now I'm curious.
This is the gap over, this is the resistance level that I have my eye on. First and foremost, that 150 level, right? That's where we topped out, and that makes sense because over here, which takes us back to April 2021 and July 2020, right here, like between spring and summer of 2021, this is the weekly chart on Etsy. We definitely had 150 resistance. We broke down sub 100 and we moved up with an upward channel over here, as you can see, to that $150 level. Lo and behold, we rejected off 150 or just, yeah, right around 150, and now we're making lower highs and lower lows. So I personally would not be interested unless, one, it decisively broke above. No, I'm not done. Ram. Okay, I'm almost done talking. Above this downward trend line over here, unless you decisively break above it, or you get above that $100 level, which is a newer high. So that's what I'd be looking for on that. But as I was so told at the moment, it is now 2 o'clock.
It is, look at
so
that.
So it's time for you to send it off.
Yeah, I mean, thank you everybody for being here. I think we learned a lot. Thank you again to Sean and Neil for the wonderful insight, for allowing me to ask some questions there. I hope we all learned from it, and we will see you for the last day of psychological trading tomorrow. Same bat time, same bat channel. For now, Brendo's at the big desk.
Hey guys, yeah, welcome in. 2 o'clock on busy Thursday afternoon here as we head back to the upside right now. Just noticing the NASDAQ back, not 2-day highs, but 16,038 right now, trying to get back higher on the back of strength specifically in semiconductors. We'll